at a few quick examples of how technology from the past reshaped a lot of the things we take for granted today in real estate. We're going to look at how technology today is destabilizing a lot of our assumptions about real estate assets. We're going to think a little bit about what are the implications of these things, and then try to figure out what we can do about it, or what we can start to do about it. So, to start with, anyone knows what this is? You can say it in Finnish, I understand. Okay, so it's a cash register. Not something we traditionally would consider PropTech, IMAX. But when we look at the histories of cash registers, we actually see that before cash registers were invented, people that owned a store, because they had to negotiate directly with their customers and they had to look after their money, they could only open, one or two or three stores because they had to be there personally, or they had to employ their relatives. Once there was a machine that allows people to actually let people that they don't know manage their own money and their own sales, that facilitated the emergence of chain stores and branded chain stores. So suddenly allowed people to own multiple stores, hundreds of stores across different locations. Of course, other technologies helped as well, such as trains or telegraphs, and later telephones. Does anyone know what this is? This is a Ford Model T, but unlike the famous Ford Model T, this is the truck version that came a little later. And we all, of course, talk about cars often, but when you look at the history of trucks, especially in the early days of cars, trucks had a very big impact on our cities because they liberated industrial goods. So it used to be much harder to move things than it was to move people, because people can walk, they can cycle, they can ride a horse, or they can ride a train for a relatively cheap ticket. But to move big things used to be very difficult and expensive. And trains had a monopoly, so it was very expensive to move goods on trains. But once trucks came along, suddenly you didn't have to have all the manufacturing in the middle of the city, or next to the port, or next to the end of the railway line. You could have factories outside of the city in all sorts of new areas, moving them out of the city and freeing up space in the center of the city and really reshaping the real estate industry. Now, even more interestingly, once factories could move and be located anywhere, that created a lot of problems for real estate developers. Because real estate developers would buy a big piece of land, develop a new neighborhood, and they wanted to promise their customers, it's going to be quiet here, the air is going to be clean, there's not going to be a lot of noisy traffic. But suddenly, factories started popping up around these new neighborhoods because factories could now be anywhere. So the real estate developers started lobbying the government, asking them for regulation and for zoning. They told them, okay, if I build a residential community here, I want you to promise me that there's not going to be a factory right next door. And this is how zoning laws emerge, and now they shape all of our cities and they shape a lot of other uses. And all of that comes from liberating industrial uses. Then we have the car itself. So cars started becoming popular in the early 20th century with the Ford Model T, but really only after World War II they reached their prime. Both because they became affordable enough to be a mainstream good and not just something for rich people, and also because there was finally a network of roads and people could actually make use of cars. Now, cars impacted real estate in many, many different ways, but one interesting way is its impact on hotels. So hotels, just like factories, used to be located in the center of cities at the end of the railway line, because this is how people moved around. Now, the end of the railway line, the center of the city, there's very limited land here. So people would come out of the station, they would see a hotel, they would go to that hotel. There was not a lot of competition, there was basically a monopoly. If you owned land across or around the railway station, you win. Everybody else has no chance. But suddenly, when people started traveling more by car, they could actually stop wherever they want. They didn't have to get off when the train stopped. They could stop anywhere. And when they can stop anywhere, suddenly hotels can be anywhere. And when hotels can be anywhere, there's much more competition. And then how do I convince you to stop at my hotel and not at somebody else's hotel? So we saw the emergence of brands. Suddenly the brand for the hotel became much more important because you had to convince people to stop. You had to make them trust you. And you also had to design your hotel to accommodate people with cars. So many of the most famous brands, even today, in the hotel world, such as Marriott or Howard Johnson or Holiday Inn, actually started as motels, motor hotels, so hotels designed for people with cars. And they became so big and the brands became so strong that they ended up dominating the hotel industry. And today in hotels, the brand companies are much more important than the companies that own the actual assets, at least for most of the assets. A building in the center of the city or like a very special and beautiful building is still important, but mostly for hotels, the brand that determines how the asset is used and how much people are paying. And even the bank requires you to have a branded operator in order to even give you a mortgage for your asset. So the asset in itself is not as important as it was. Now, further, as these brands became so important, they started employing thousands of people and spending money on call centers and on specialized some technology and employment. And then they actually had to split. So traditionally, hotel companies were single companies that had a brand and had property, that had real estate. But 30 years ago, they started splitting into separate entities. One entity that owns the brand and the distribution and the marketing and the service, and one entity that actually owns the asset, which is something that we might see in other real estate categories too. Another question, this thing, does anyone know what this is? I'm sure you all do. So this is the early version of Google, still hosted on Stanford University server. And so we spoke about how people drove in cars, and then the brand made them stop. So they would look around by booking things on telephone or just by looking around and seeing a brand that they like. But then when the web came along, people started looking for hotels and looking for a lot of things on the internet. So they start their journey online. Suddenly the power is moving away from the brands towards the people that control the beginning of this journey. So like search engines. And then we see the emergence of specialized search engines focused on the hotel industry, such as Expedia or Booking.com or Hotel.com. And then the hotel companies realized that they used to be the strongest parties in the industry and they used to have all the power. But now there's even bigger entities, these online travel agents and even Google itself that are competing with them and are starting to take percentages of their revenue as a tax in order to drive traffic towards these assets. So we're seeing hotel companies are starting to consolidate to become bigger and bigger and bigger because this is the only way for them to be able to fight back against those online websites. So a website, Expedia I think has maybe 600,000 hotels. Marriott realized that if they don't have so many hotels, they wouldn't be able to spend so much money on online marketing in order to compete with those websites. So they have to consolidate. So we're seeing inventions that have nothing to do with real estate that are really reshaping how real estate companies are structured. Last one in this section, the iPhone. It's only been with us for 11 years or so now, but really made a dramatic impact on how we live, and a lot of the impact is also on how we work. And in a world with an iPhone, we can have something like this. This is Adam Newman from WeWork. WeWork in a way didn't invent anything new, but it also couldn't have existed 30 or 40 years ago in the way it is currently structured. So 20 or 30 years ago, employees couldn't work wherever they want. They didn't have a supercomputer in their pocket and a GPS and a camera and broadband connection attached to it. And a lot of people tried to reinvent the office over the years, including some advertising agencies, including Apple itself, but it didn't work because employees didn't like it. They didn't want to carry a laptop around, and the batteries were too short, and again, the internet was too slow. But the emergence of the iPhone really enabled the transformation of the office market. It enabled it to be much more flexible. And even on things that are less tangible, even something like Instagram, the fact that today we take photos of ourselves all day and share them all day means that we expect our office to be some sort of a lifestyle experience. It has to be somewhere where we go and we have to take photos of ourselves, it has to look cool, it has to have like graffiti on the wall, and all of that couldn't have been so important without the iPhone. So I mean, thanks to the iPhone, Adam Newman now has $1.7 billion. Now, we also see that because flexible work is emerging, because of the iPhone among other things, the office market as a whole is becoming more flexible, and it's also becoming much more dangerous. So if the tenants are not staying for as long as they used to stay before, if employees are running around in ways that are difficult to predict, it means that the office building itself is becoming a much riskier asset. So in the past, you had corporate tenants coming in, signing a 10-year lease, everyone was sitting at their desk, everything was good. The landlord collected the rent, he pays it back to the bank, everyone is happy. Today, everyone is moving all the time. The landlord is looking at its building. It's becoming very hard to predict what the income will be because every month you have people that cancel and people that come in. The bank is getting a little nervous as well. And every now and then you have something like what we had with WeWork over the last few months, where the largest tenant in most cities is actually a company that is private, it's losing money, and in one day can go down in value from 47 billion to 5 billion. It can lose 5,000 of its employees, and it can maybe shut down thousands or hundreds of thousands of square meters of locations, bringing instability and uncertainty to the whole industry. Now, don't get me wrong, this is not WeWork's fault. WeWork is just a symptom. The office market is becoming more flexible because this is what companies need. So with or without WeWork, it's becoming a riskier asset. So we see so far that non-prop tech, technology not designed for real estate, is impacting the way real estate assets are used, it's impacting the way they're designed, it's impacting the way they're regulated, it's impacting the way the different companies that operate them and own them are structured, it's impacting their risk profile, and ultimately, it's impacting the way they're valued. Now, this was the past. When we look at the present, what is technology doing to real estate today? And what can we do about it? So historically, real estate assets, their value is defined and also protected by a set of different kind of features or attributes. So first and foremost, location. If I have an asset in a good location, I know that it's always going to be valuable. Second, accessibility. It has to be easy to access. Usually that means being close to a train station, a bus station, a major road. Third, it has to be visible physically. Historically, if an asset was visible and it looked beautiful in the physical world, it became more valuable, not just for the owner, but it was more valuable for the tenants as well. Tenants like to have their logo on the building because that helped, or used to help, their marketing. The fourth thing, information. Real estate historically is an industry that is based on relationships. So, if I today want to go and develop, or 10 years ago wanted to go and develop a new project in a new city, it would have been very, very difficult for me to get the information I needed in order to be successful, to understand what the plans of the government are, what are the rents nearby, what is the vacancy of all the different buildings around me, how popular are different areas, how people are moving around. All of these things used to be very specialized knowledge that was only available to a small group of very, very large investors. We also see that capital itself, real estate as well, if you wanted 10 years ago to get $50 million or $100 million to go and develop some new project, you would have had to be a very big company already. You would have to have the relationships with the bank, the relationships with the government, the relationships with the tenants. Otherwise, it would have been very difficult for you to get money. It wouldn't have been enough to just make a nice PowerPoint and say, hey, I have an amazing idea, give me $1 billion and I'm going to go and buy these buildings. Finally, regulation, also, sorry, not finally, two more. Regulation is also protecting the value of real estate assets and it's also protecting the owners of these assets. So if I buy a piece of land and I make a plan for the next 20, 30 years of what I want to do with this land, it's good for me that the government can promise me in advance what everyone around me is also going to do or not do. So I can predict the supply and demand in my region very, very easily historically. And finally, scarcity itself, the idea that land, God is not making any more of it. So if I own a piece of land, it means that nobody else can own it, it's inherently valuable forever. So just by the fact that I own it, that used to be enough to promise me that I'll always be rich and successful. But now technology is undermining each of these things in different ways. So starting with location, we're seeing all sorts of new ways to move people and goods around. Starting from self-driving cars, which are taking a little longer than expected, but we're still starting to see autonomous mobility making an impact, whether it is for some trucking lanes, whether it is for little devices that move things around, so not people, but they move, delivery, food delivery, or online commerce delivery. We're seeing a lot of micro-mobility emerging, so scooters, bicycles, all sorts of other little devices that are coming into our cities and are drawing more and more of the traffic. And we're seeing here in the middle, ride sharing, so companies such as Uber and Lyft, which didn't only replace the taxis that they killed, but actually made the whole taxi market about 4 or 5 times bigger than it was before. So people that used to take public transport are now using other things, which means that they're moving in different ways. So just to use this as a quick example, in a world governed by trains, trains they run on a very simple line. They stop at stops that are known in advance. Before the train is built, probably for 20 years before, everyone knows what the plan is already and can start buying land along the tracks and they're responding accordingly to that. And then once the train is set, it's not going to change for another 20 years or even 100 years in many cases. So for a real estate company, life used to be easy. It would look at the plans, it would make decisions based on that, what value would be distributed based on who is close to the station, who is close to the right line, and that was it, nothing would change. With ride sharing, things are starting to get a little more mixed up because suddenly people are not riding along these clear lines, they're riding in all sorts of other places. And now they don't stop just wherever there's a train stop, but they can stop and get off wherever they want. So suddenly, having a building on top of a subway station or having a building somewhere that is actually easier to access by an Uber or a Lyft, the value of this building is relatively going down a little and the value of the other building is going up. Now these things, they were not planned in advance. The public was not notified about them so that people could buy or sell land. They just appeared out of nowhere and they keep changing all the time as well. So the fact that Uber likes to draw people here today doesn't mean that tomorrow it wouldn't want to drive and drop them somewhere else if it becomes more convenient. Now with micromobility, it gets even more chaotic because people don't even need roads, or they drive in the wrong direction of the road. They basically do whatever they want. They drive on the sidewalks. They do, they don't have to wait for anyone, so there's not even an app that actually can tell you how traffic is going or not going. People just take it, and the whole environment and the movement of people is becoming hard to understand even in real time, but definitely very hard to understand when you're trying to predict something in advance. So when you buy a piece of land, in order to develop something that will only reach the market in 3 or 4 or 5 years, and then has to remain valuable for another at least 10 years for you to actually sell it and make money, your life is becoming much more complicated. And the original idea of location and accessibility is being completely turned on its head by these new technologies. Now, accessibility to a single location is becoming complicated, but for more and more customers, accessibility is not really about how do I get to a specific building. More and more customers, both in the office world and the residential world as well, are not interested just in one space. They're interested in the ability to access a network of different spaces to allow their employees to have an ideal space for whatever activity they have to do today, because of the diversity of how people work today, because of how creative work is produced. It's no longer produced by the same person sitting around the desk and just doing like this. It's not as mechanical as it used to be. People need access to a variety of spaces. They need a space to focus and work on their own. They need a space to collaborate. They need a space for education and training, which is something that companies spend much more time on. They need a space to impress a client or do a presentation. They need a space when they travel. So people are looking at buildings more and more as a solution based on a network and not just as a specific space. And the landlords who are smart are already starting to take advantage of that. Now, networks of buildings can even generate money in all sorts of other weird ways. Starting from simple things like installing 5G base stations on them and making money from the telecom companies, but even in the future serving as landing zones for today helicopters, but in the future flying taxis, which might actually be popular before self-driving cars will arrive, just because flying is just a little easier than driving on a road. So here as well, we see some real estate companies, in this case, Colony North Star, a very large real estate investor, investing in a company that is like an Uber for helicopters and that wants to build a network of flying cars in the future, investing in them because they think that the roofs of their buildings can be the taxi stations of the future, the places where people can land in the city. Because if cars start flying, they still need to land somewhere, and most of the places where they have to land are going to be private land that is owned by real estate developers. Now, the idea of visibility is also changing. This is one of the hottest businesses at the moment. It's called cloud kitchens or dark kitchens. And it's basically restaurants that don't exist or that exist only on the internet. So instead of you going to a delivery website and saying, hey, this Mexican place looks nice, I'm going to order food from there, you actually do the same thing, but the Mexican place doesn't exist. It only exists, there's like some nice photos of the internet, it looks cool, but there's no real restaurant. There's actually only a kitchen hidden somewhere in an industrial facility, in an office building, in the third floor of a retail space, so not on the street where the land is expensive. And the booking engine online and the integration with other delivery services is what makes the physical asset valuable. So the fact that the asset is visible online and looks cool online and has a nice Instagram channel that draws people to want to eat the food, this is the visibility of the physical asset. This is what determines how much money per square foot the business is going to make. So not the location on the street, not the fact that people look at it or what the building looks like, but what everything looks like online. A simpler example of this we're seeing in the co-living, in the co-working world. This is a company called Common. It's a co-living operator in the US. And for them, a lot of their customers find them on the internet. So often it's people that are moving to a new city for the first time. And they judge the building based on what it looks like online and based on how thoughtful the design of it is for their needs. So Common shows people, their target customers, hey, we thought about every little thing that you want to make. You have a 3D tour. We can show you who else lives in that building, so you know in advance if they're nice people or not. And people often make a decision about where to live based on this online experience, sometimes without even visiting the city because they have to find an apartment before they move in. Now, when it comes to information, today suddenly everyone can know almost everything. I can log in online and I know the rents, the tenants, the vacancy, what businesses are nearby, a lot of things about a building that used to be very rare and valuable and hard to find. And we even see that not just that the landlords no longer have a monopoly on information, but often the landlords are not very good at even understanding the information that they have. So we're seeing the emergence of new companies that can actually take all this real estate information, take a lot of data from other sources, mix it all together, and start to draw insights that even the real estate companies don't have. An example of this is this company called Skyline AI, which is a bunch of data scientists. Actually, some of them worked on the computer program that beat Garry Kasparov in chess. And they said, hey, if we can beat Garry Kasparov in chess, maybe we can beat some guy who's like a landlord of the office building next door. So maybe we'll start looking at data and we'll see if we can choose better investment deals and figure out the pricing on different deals on our own. But instead of selling it as a service to other real estate companies, they actually said, if we're so smart, maybe we can just raise our own money, work directly with investors to buy buildings and to become a landlord of sorts. So I don't know if they will succeed or not, but they're doing it together today. They have partnerships with Deutsche Bank and a lot of other large investors. And it's happening, and they're taking money that used to go to like traditional real estate companies, and it's suddenly flowing to a bunch of people who, 5 years ago didn't know anything about real estate. Now, when it comes to capital, we're seeing more and more large institutional investors that used to invest in real estate developers or in real estate private equity funds going directly and investing with all sorts of new operators, co-working companies, co-living companies. So we were working with a couple of large pension funds to buy Devonshire Square in London, a very large mixed-use project. We see even Airbnb partnering with Brookfield in the US to develop housing communities that can be used for home sharing. So things that, 5 years ago, if I would tell you that Airbnb would partner with the second largest real estate owner in the world to develop apartments, it would sound crazy. But today, it's happening. And on the other side of the market, even for smaller projects, we're seeing crowdfunding becoming more and more important. So it used to be a place where you could, get $1 million to develop something, but today, if I have a cool idea, I can go on the internet, and if I can tell an exciting enough story, I can raise 20 million or 50 million or $50 million from people that I never met and that just really like my ideas and the PowerPoint that I put together. So capital is becoming much easier for people with the right ideas to acquire. So again, no longer a monopoly of the large real estate companies. We also see on the venture capital front that the largest investors in the world, not PropTech investors, are more and more interested in real estate. So funds such as Sequoia, Andreessen Horowitz, Excel, the largest investors have a growing appetite for technologies that have something to do with real estate. And they have this appetite because they understand that real estate is a huge industry, it has a lot of problems and a lot of growth that can be unlocked. So after the WeWork story, everyone said, WeWork has bad margins, everyone should invest in software, and software has 80% margins. That's true and that's nice, but software companies are very small, and it's very hard for them to spend a lot of money, basically. So if you have $100 billion to invest, and you want to give it to, let's say, Zoom, which is the hottest IPO of the last year or so, the market cap of Zoom is $6 billion. So they just can't take your money because they don't have anything interesting to do with it. If you have to deploy a lot of money and you're looking for growth for the next 10, 20 years, you have to invest in real estate and in a few other industries that are equally difficult, such as healthcare, such as logistics, industries that have low margins, that require you to have a heavy balance sheet, that are very regulated, basically industries that everyone was happy to avoid for the last 20 years. But now, all of the easy wins with technology are over. And if you have money, you have to invest it in places that are much more difficult. So we're going to see more money flowing into the industry. And on the other side, we're seeing more and more real estate investors getting an appetite for technology as well. So investing in specialized PropTech funds all over the world. Some of the larger ones are investing directly, companies such as Brookfield and Blackstone and GIC. So a lot of money coming in to try to destabilize the industry. When it comes to regulation, Airbnb is the prime example of why that doesn't apply anymore because of technology. So, someone bought a piece of land, developed a hotel, the government told him, okay, you build 1,000 rooms here, there's not going to be any other hotel within 2 kilometers. Suddenly, within a few weeks, hundreds of new rooms come online with Airbnb, the government is struggling to respond, the developer is struggling to respond, so predicting the supply and demand from your competitors is becoming more and more difficult. Now Airbnb is still fighting with regulation and it's going to get more regulated, but if it does stop or slow down, it's going to happen about 10 years after it started really disrupting those markets. So it took a very long time for government to respond. Now even for things that are completely legal, it's becoming more and more difficult to use the old zoning terms of, what is an office, what is an apartment, what is hospitality, what is a hotel. We're seeing everything getting mixed. We're seeing hotels and apartment buildings adding co-working spaces. We're seeing co-working spaces opening inside malls. We're seeing malls being converted into delivery centers. Even street retail, often when there's a store, people don't really go there to buy anything. They just go there to return something that they bought online or to try on something that later they would go and buy online. What else are we seeing? Again, in Airbnb, apartments, hotels, all the old definitions are getting mixed up, so it's becoming harder and harder for city planners to have an impact on how space is actually used, and it's becoming harder for real estate investors to actually predict the supply and demand dynamics when they buy a piece of land. So life is getting more and more complicated. Meanwhile, the products themselves are getting more and more specialized, so even within the old definitions, let's say an office, today people no longer want an office space. They want a space that was designed specifically for people like them, or an apartment community that was designed specifically for people like them. So if you type, co-working for into Google, it will give you a million options and show you what people are building today. Co-working for mothers, co-working for sisters, co-working for architects, co-working for lawyers, maybe co-working for unemployed people also coming soon. Everyone's going to be co-working just for them, which again makes it very difficult to predict and understand the detailed level of the supply that exists or that is coming up in the market. Now the idea of scarcity itself, even that is being questioned. So, the world is not creating more land, but the land that we have is being used much more intensively than it did before. So this is a company called Spacious. What they do is they go to restaurants, very expensive restaurants that are only open for dinner, and then from 9 to 5 they convert them into co-working spaces. They put in internet, they bring in coffee, they put a little community manager, and suddenly you have a lot of office space that was just created out of nothing, without building anything. So the person nearby who built a co-working space or built an office space, he didn't assume that the restaurants or the retail spaces nearby will also be office space. So when he did a supply and demand analysis, this is something that he couldn't predict. We're seeing in the industrial and logistics world, a lot of our industrial spaces and our storage spaces were designed for humans and trucks. So they're usually single floor, they're accessed in a certain way, and the way they use land is very inefficient. But today, suddenly, when more and more drones, more and more self-driving little devices, more and more robots go into these spaces, they can suddenly build a 4-floor building where historically they only had a 1-floor building. So the same piece of land can now accommodate 4 times more goods. Again, without any of the basic assumptions changing, this is mixing up the available supply in the area. We also see companies in the residential world that are building robotic furniture. I wanted to have a video, but it doesn't really work, I see. But companies such as Bumblebee or Ori Systems, which IKEA invested in, I think a few months ago, they build furniture that moves around. So either a bed that sticks to the ceiling after you wake up and disappears, or a wall that moves, and then the same room can be an office or a home office. It can be your living room, it can be your bedroom. So without using any more land, you're actually getting much more use out of the same existing land and out of the same existing building. This is a floor plan of WeWork, and here you see as well the level of density, the amount of people that they can stuff into a floor plan is about 1/3 of the average that a traditional real estate company can achieve. It's about, I think, 4 square meters per person, or 50 square feet per person. Now this looks very easy, you look at it and you say, hey, what's the problem? I can also draw something and just put a lot of people in there. But the thing is, these people are happy. They pay. And they pay because it's integrated with a lot of other things that traditional real estate companies don't do, which we're going to touch on in a minute. So just to recap the implications of technology on real estate as it is today, we see that assets are becoming more and more dependent on their operators. So to just own a building is not enough. The building is no longer valuable by itself. Someone needs to know what to do with it. Someone needs to know how to market it. Someone needs to continuously respond to the market in order to keep it valuable. So very much like a hotel or a restaurant, but now that applies also to office buildings and residential communities and even industrial facilities. So assets that used to be like very boring, very predictable, very suitable for passive investors are now becoming much more operationally intensive. We also see that it's becoming much easier for new competitors to come into the market. So not only that your assets need more work, but there's actually more people competing with you on what to do with those assets. And these people can actually draw a lot of capital directly and take your business away from you in ways that couldn't have been imagined 10 or 20 years ago. We see that real estate is essentially evolving from an asset into a business, from a thing that you own to a thing that you have to continuously operate, that you have to compete with, that you have to think about customers, just like any other business. And this is actually good news. We see that there's no more one-size-fits-all. You can't just develop something and say, okay, I don't care if there's a law firm in here or a financing firm or a startup. I'm just going to build the same thing, bring somebody to make sure that the air conditioning and the elevators are working, and see you later. Today you have to constantly choose who your customers are. And we see essentially that operational effectiveness is not enough. So in the past, companies just had to be very good at doing the same old things, but now they have to start thinking strategically. So in other words, basically real estate is changing from a game of Monopoly, where if I own this square, every time somebody walks by, I'm just going to collect a check, into a game of chess, which means I have to think about every move I make, I have to respond to whatever happens elsewhere on the board. It's not enough to know that I own this square, and then I don't care what else is happening, as long as I own it, I'm going to be rich. So it's changing from an industry where winning means doing the same things better, which is what most real estate companies do. You know, they buy the same buildings, they operate them in the same way, but maybe they do it a little better. They do it a little faster, they have 2 less employees, their leasing rate, you know, after 3 months is 87 instead of 83. This used to be the difference between real estate companies. They all, you know, from Blackstone to your neighbor or your grandma who owns one house, the business used to be the same for everyone, just like some people did it better. But today, it's turning into an industry where winning means doing different things. So not doing the same things better, but doing completely different things in order to win. Essentially, an industry governed by strategy. Now, what does strategy mean? What does it mean to have a good strategy? This is Michael Porter, a Harvard professor and kind of the godfather of strategy. And Michael Porter says there are 5 key attributes of a good strategy. 1, it needs to have a unique value proposition. Unique value proposition means I understand your needs and I develop something to answer your needs. It doesn't mean, oh, I have this box, take it from me, do whatever you want, you know, get your own architect. The second attribute is it has to be based on unique activities. Unique activities means don't do what everybody else is doing but better, but do something different from what they're doing. Third, it needs to involve clear trade-offs. What does it mean? It means that you have to choose who you're serving and also choose who you're not serving. You cannot be loved by everyone. You cannot be like a vanilla ice cream. You have to be something unique that some people want and other people don't want at all. 4, those activities that you do, even if they're unique, they have to be interconnected in a specific way that makes it very hard for other people to replicate them. And we're going to look at examples for this in a second. And 5, the strategy has to be implemented continuously. So it's not just something that you try, it has to be something that you're committed to, that you're taking a risk on, and that you're willing to continue doing, and again, have a plan for. Now, a few examples of how this works. Now, all of these are startup companies. They might fail, but that's actually part of the point. So Coleman, as I said, a co-living operator in Brooklyn, have a beautiful website. They take apartments, furnish them, split them into 4 or 5 bedrooms, and then market them to people who can't afford to live on their own. When we look at their strategy, so first, they have a unique value proposition. So furnished bedrooms that are flexible, affordable, with a community of young people. So this, probably if my mother is looking for an apartment, she knows that this apartment is not for her. So it's unique. On the other hand, the person, my cousin who just moved to New York and is like 21 years old, this is exactly for him, and he also understands that this value proposition is for him, it's not for anyone else. Second, they're doing all sorts of things that a traditional real estate owner doesn't do. So they choose furniture, they have their own online marketing and website capabilities, their leases are structured differently, the service that they provide is different. They come and they replace the dish soap in the apartment, and they change the sheets so that the different roommates are not going to argue with each other. They do all sorts of little things that a traditional company, a traditional real estate owner wouldn't do. They have clear trade-offs. So again, their product, living in an apartment with 4 roommates and paying for someone to put stuff in your fridge is not something that is for everyone. And they're committed to that use. So if suddenly there's not enough young people in the world and it's all becoming families with 4 kids, this product is not going to be suitable for them without a big investment. So they made a trade-off, they took a risk on committing to a specific customer. Their activities are interdependent, so most landlords don't like roommates because it means that instead of signing a lease with one person, I have to talk to 4 different people in order to fill an apartment, which is very difficult. But for Coleman, it's easier because they built a website that makes it easier to match these roommates and to find them. So their activities are interconnected. They're able to market assets of a different kind because their online activities work in a great way with their physical product. And 5, it's implemented continuously. So they're committed to that strategy. The whole company is built around it. The talent that the people who work there, the digital things that they build, it's all working towards a specific strategy. Second example, Sonder. So Sonder is kind of like a branded home sharing, like something that evolved out of Airbnb. So instead of booking an apartment on Airbnb and having a surprise every time you go to an apartment and not knowing what you will find, they put a brand name and their design on specific apartments. and basically compete with hotels, but with a product that is more standardized and more branded. And there's many companies like this. So in terms of unique value proposition, it's similar way to a hotel, but you actually get a full apartment, which is very nice for many people. Their activities here too, the design, their online marketing, their branding, the legal arrangements that they have with customers are different from what a traditional apartment landlord does, and they're different from what a traditional hotel developer and operator does. There's clear trade-offs because if you choose to go there instead of a hotel, there's many things that you're actually not going to get. There's not going to be a restaurant, there's not going to be a gym, there's not going to be a lot of facilities that you have in a hotel. So they decided to avoid certain things and to focus only on other things. The activities are very interdependent because people would never find these apartments without the online activities of the company. So the real estate side, and the digital side, and the legal side are all combined in a unique way that is a little difficult for just any company to start doing tomorrow. And hopefully they'll continue implementing it continuously. It's a young company. 3 more examples. Cloud kitchens, I already mentioned before what it means, but we can break it down here quickly. So the value proposition is very unique. Basically, we will lease you a restaurant space, but actually the space doesn't have any street facade. Second, they pre-install all the kitchen equipment. It's a bit like a WeWork for restaurants. So everything is there, and you can go and share a space with 10 other restaurants, and each one of you is working next to the other, and you all have a different face in the digital world. The trade-offs are clear. Again, very different products from the normal restaurant space or the typical restaurant space. And also, again, if it doesn't work for this business, it's hard to do anything else with it because you're just stuck with some industrial space somewhere that is empty. Unlike a retail space where if you own it and this business doesn't work, the space is still valuable. These spaces only make sense if they're integrated into the whole delivery and marketing network. The activity is very interdependent, and also we'll see how continuously they implement it. Pretty young business. Number 4, and I'm trying to give you examples for different types of assets, so apartments, offices, restaurants. This is industrial real estate, so logistics. This is a company called Lineage Logistics. Didn't exist, I think, 10 years ago or so. Today it's the largest owner of cold storage assets, or assets that need cooling. And what they did is they started hiring scientists in order to figure out the best way to cool down large spaces and to develop their own technology and devices in order to keep those spaces cool. They also started integrating with other delivery services, so trucks that have refrigerators in them. So basically today, instead of offering the customer just an empty space and leaving the customers to figure it out, they provide a complete solution to people that need to move food around. Now, as you know, there's more and more food being moved around, being delivered, and they're controlling that space with that unique strategy. So again, unique value proposition, unique activities, very difficult, very complex and specialized business, committed to a very specific use, so only people that need cold storage, not anyone that need, if you want to put clothes or whatever it is that you're selling online, they're not catering to you. Interdependent activities, very interdependent, and again, so far they've been doing it for more than 10 years. They became the largest landlord in the world for that category, and they actually own the assets. So unlike WeWork or companies at least, they own the assets. They're looking at maybe putting them into a separate REIT or other separate entity. Number 5, the office group. I didn't want to use WeWork because they bring in a lot of baggage, but the office group is an operator of flexible offices based out of the UK, profitable company. Blackstone is now the majority shareholder of it, so they're doing well enough that other real estate companies want to invest a lot of money in them. And here as well, unique value propositions, so focusing on creative people in cities that need some flexibility, that need community, that appreciate a certain design aesthetic, that like all the events and media that the company produces, and a product that is not suitable for a lot of other people, but it's very suitable for those people that live in those specific cities, places like London. The activities are from the type of assets that they use. They're usually older buildings that, 10 years ago, if I would ask you what's the best and most expensive office in your city, you wouldn't think about these buildings. They're old, but they have a story, they have character, and their customers like them, but wouldn't like a fancy building made of glass and steel. There's clear trade-offs. One, because again, they buy those assets that they have to find something creative to do with, otherwise the assets are not very valuable and need a lot of work and investment. The layout, the amenities, the vibe that they bring, all of these things are quite unique and require a lot of work from these companies. It's all interdependent because, again, the asset itself wouldn't be so valuable or wouldn't be able to attract those best companies without all the other activities that the company is doing. And they've been doing it for nearly 2 decades now, again, doing it profitably. So it's important not to think just about WeWork as an example of, co-working can't work, it's losing money. Let's all go back to doing things the way we did before. Now, the one thing that all of these companies have in common is that they're a little different from how real estate used to be. So if we see, this is a chart, let's see if I have a pointer that actually works. So this shows how much value add, how much profit a company can capture. And this shows where it is located in the value chain. So, starting from people that design the buildings, through all sorts of other tools that they provide, down to like marketing and aggregating demand. Now, historically in the real estate industry, the real estate owner, so the asset itself, the person who owns it, used to capture most of the profit, and also used to have most of the power. He would decide who's going to design the building, who's going to be the property manager, who's going to provide the property management software, who's going to be the agent who does the marketing. So all of these other people were interchangeable. They were easy to replace. They were commodities. The only thing that was unique and powerful was the asset, the building itself in the middle, and the person who owns the building had all of the power. Now what we started to see is that more and more people at both ends of the chain are becoming much more important. So whether it is people that know how to design and produce unique products with unique experience, or in the case of Airbnb and some other companies, or Sonder, people that know how to market the assets in unique ways, that have their own loyal consumers and their own loyal customers. And as a result, the asset itself is starting to become the thing that has the least power. It doesn't mean that buildings are not worth anything anymore, but it means that to just own the building means that most of the profit in the industry will start flowing to other people who can do unique things. Now this smiling curve is an idea that started in the computer industry in the 1980s and 1990s. The companies that made the actual computers used to be the strongest companies. So they own the big thing, and then they would buy different pieces and software and different things from other companies. And the important thing and the hard thing to make used to be the computer itself. But as it became easier and easier to make a good computer, because there were suddenly standards emerging in the industry, it was very easy to buy off-the-shelf components and just put them together and build a computer. Suddenly the companies that make unique components, such as Intel, or that control the interface with the customer, such as Windows, started to suck all of the profits out of the industry. So computers didn't stop existing, and computer companies didn't stop existing. But most of the profits in the industry ended up going to people that didn't own the physical thing, but to people that did unique things around and inside the physical thing. Now when we look at all of these startups, you can say, okay, this guy has nice ideas, but all of these companies can go bankrupt tomorrow, just like WeWork. And it's true, but that's part of the story of what's happening to real estate. It's becoming riskier. It means that we all have to try all of these things, and it means that we might fail, but there's just no way around it. So, let's recap. By the way, how much time do I have? Because the clock I don't think is correct. Now it's correct, okay. I have you all day. Okay, relax. So, we're almost there. So let's recap. So we're seeing that the traditional defenses of landlords are crumbling. The things that defended the value of the asset, the things that defended the business of the landlord are all crumbling. We're seeing that the focus is shifting from the assets themselves to the businesses that run on top of these assets, to the businesses that use these assets. We're seeing that there's more risk, but also more reward, because people are using space much more intensively. They're making money off of all sorts of other things that are beyond traditional rent. And also that there's nowhere to hide. You can't avoid this risk. You can't choose to just, remain boring and focus on whatever it is that you were doing before. We're seeing that PropTech is really just table stakes. It means that most of the technologies that are focused on the real estate industries, they help run real estate buildings more efficiently, but they don't really help you build a completely new business model. They don't help you decide who your customer is. These are things that you have to do separately from them. So all of these technologies are necessary, but they're not enough. They just allow you to even stay relevant. But then you have to start competing and figuring out how you're going to use them. And we see that it's a new game. Not a game of Monopoly, but a game of strategy. Do you know how to play this game? If you don't, I just wrote a book about it that you should read. So, that's it from me. Thank you very much for your time. Feel free to get in touch. Follow me on Twitter. Sorry, I'm going to take questions as well. No, Zoom is coming.
First of all, like I said before, it's amazing with some of this stuff. Is there a question or two? We've got actually a few minutes. We want to try to stay on time. We were a little ahead. I know it's the Finnish audience. Will you please just have a question or two? Is it anybody? Anybody? Question?
We don't want to finish.
We don't want to finish. No one has a Magnus. Do you have a question? Magnus has a question. I'm going to make you're sponsoring the whole thing. You should have a question.
So Magnus asked, where do I see the biggest mistakes when property companies invest in PropTech? So I think often the reason that they invest maybe is the biggest mistake. So what I saw, in the last, I've been talking about this for a while, 3 years ago most landlords didn't want to hear anything about technology, they just didn't care. And then 2 years ago they started to understand that maybe something is happening and they need to change. And then they said, okay, you know what, we need to do something about it. So the things that they have to do something about it, most of them are very painful because it means changing the structure of the company, taking assets that are doing okay, but changing them and investing in them so that they will do amazing or they will be ready for the future. Replacing some of the people that work in these companies all the way from the top down. And then they said, this all sounds very difficult. Maybe can we just throw money at something maybe? And maybe that's easier. So people came along and said, yes, give me $10 million, I'm going to invest it in PropTech. So I think, obviously, it's important to invest in PropTech, and we should all do more of it, but I think many landlords come to it from the beginning as an excuse not to change. So I think that's the biggest mistake. The second one, I don't know if it's a mistake, but it's a challenge. Often companies have this amazing technology and they invest in the tools, they pay for them, but then they don't know how to implement them properly because the processes within the company are still broken. The incentives of the people that are using the software are not in the right place. So people, they feel threatened by it, like it's going to replace them, or they just feel like, I don't need this thing, I'm just going to keep doing things the way I did them before. So I think we saw outside there's some amazing tools out there, but often companies only use 5 or 10% of what these tools can actually do. So I hope that answers the question.
Yeah, I have one other question. If you were to look out 2 or 3 years, and I know we were talking about this, if you were to pick out maybe 1 or 2 of the most underutilized segments, and I think it's construction, right? All the things that are going on. What 1 or 2 would you think of would be the most underutilized right now that you would really look at?
So I agree with you. In construction, there's a million things to do. But I think there's a lot of super simple kind of bread and butter things that we can do better at any building, starting from how you access the building and how you check in and how you write down your name and how the elevator knows if someone is there or not, to, the sensors of the temperature of the air conditioning, the quality of the air. There's a lot, there's some startups outside that help you actually know that the air is clean in your building, which is great, but it shows you how behind we are. We have clean air in our building is now like a unique thing that a building offers, This should be like the most obvious thing. So there's a lot of other bread and butter things that I think would be good for real estate companies to start with. So I think to go back to Magnus's question about problems, landlords often now, when they do invest in PropTech or do something, they want to do something kind of glamorous and amazing and to show that they're new and unique. But there's often a lot of little things that they could just, that are much easier to solve with technology. And I think starting there would be better. Even a company like WeWork, we were just talking about it earlier, Moise and I, even there, when you're at WeWork, you cannot open the door with your phone yet. Or if you have a guest, you have to come downstairs and bring them back up. So a lot of these processes can be made much more simpler and much more delightful for the customer.
I had a conversation with the CIO of Brookfield. They own 1,000 buildings. He said the biggest problem I have is how to get people in and out of my buildings.
Access.
Number one problem that he has. All the money they have and all the things they do. So it's amazing that he said, if I could solve that better, we would be 1,000% better than we do. Are we done?
Yeah.
All right, great. Susan, thank you. One other thing, that's the cutest baby I've ever seen. All right, well, we're getting ready to go here. We have another amazing speaker. He's going to talk about PropTech in the EU and sustainability tech. And he's from a firm called Fifth Wall, which I am very familiar with, especially both the principals. I'm really good friends with both of those. So I'd like to bring up Roloff from Fifth Wall.
Can everyone I almost killed myself coming up here, so thanks. So thanks for having me. I really appreciate it. I'm Roloff, Managing Director at Fifth Wall. First of all, I want to congratulate the Finnish team for making the European Championship soccer. That's pretty exciting. My Finnish friends told me to say that. I would get a lot of money. So no, I think it's great. I think it's the first major tournament for the team, so I think it's fantastic. Finns always punch above their weight, which I think is really good. So I'm Roloff, again, Managing Director of Fifth Wall. The way to think about Fifth Wall is we are the largest venture capital firm in the world focused on what we call the built world, which is really just a fancy term for prop tech or real estate technology and innovation. The unique thing about us is that besides having about $1 billion under management, we have most of the large owners and operators in the world as investors. So we have about 50 of the largest owners and operators. 40 of those are in the US, some of those are in Europe, and some of those are in Asia. And so what we do is we go out, we find the latest and greatest innovators, technologists, prop techs, we invest in them, and then we partner them with the big owners and operators. And the real idea is that there is a herd mentality in real estate, and we saw that in tech. We actually thought that was the reason tech was being held behind. We went out there, we got those big owners and operators, top 5, as investors. We go out, we find the innovators, we invest in them, and then we partner them. And then because of Hines, because of Prologis adopts the technology, basically everyone else follows. And so that was the thesis. Luckily, it's worked out so far. And I'm really excited to be here in Europe talking with you. I'm going to talk today a little bit about US perspective. With the greatest respect to the wonderful entrepreneurs here, I will tell you that having traveled to Europe and experienced it, I do think that PropTech is a bit delayed from the US. I would probably say it's 2 to 3 years delayed. I don't think that that's because of talent here. I think the talent here is tremendous. Again, I think that particularly the Nordics punch above their weight when it comes to technology. I think it's just because Europe is less institutionalized than the US when it comes to real estate. Real estate is the largest, US real estate is the largest institutional asset base basically in the world. And slowly Europe is becoming much more institutional. And so as that happens, I think you're going to get the pressures the US felt. And I think that's going to force managers to really look at P&L margins operations, which they haven't had to in the past. And that's going to force them to really look at tech as part of the answer. So what I thought is, I go to a lot of these conferences, and I think the presentations are great, but the talk is really high level. So we talk a lot about, hey, you need to digitize, hey, you need to care about tech, hey, you need to implement tech. And everyone's, okay, what the heck does that mean, right? Like, okay, I'm here, but what do flying cars have to do with me, right? I own a building, I own a bunch of buildings. And so today, because we've been around for a while, because we've been around 4 or 5 years, because we've been in this for a while, we've been working with our partners, we have a lot of examples now we can show you of things that have worked, right? Now, a lot of things have not worked, and that's okay. But the big thing is to try to learn from that as I think PropTech kind of increases its veracity here within Europe. So again, just a little, this is kind of us, this is our partners, kind of a who's who in the US and then abroad. We're very, very lucky to have these partners to work with. But I really want to get into what I want to talk about today, which is the meat of it, which is the lessons learned. So I put this into basically 5 different corporate lessons learned when it comes to innovation and PropTechs. The first is don't ignore innovation. And just an audience here, who has heard of the company Roomkey? Okay, we have one person, one person, a few people. Okay, good, that works. Okay, so let me take you back in time to 2005, 2006. You had this emerging technology called online travel agents, right? Priceline, Expedia. They were coming out. You could book your hotel online. And the hotels looked at them and said, oh, that doesn't really matter. And in fact, they said, hey, this is great. I'm running into trouble in 07, 08. I'm going to sell my excess inventory into these platforms. And all these platforms at first had really low commission rates, about 5% commission to sell on the platform. And in a few years in, probably 09, 2010, 2011, the hotels start realizing they're losing market share to these OTAs, right? And so they say, look, this is really dumb. We own the brands, we own the buildings, we own the customer relationships. We should be an OTA, right? We should start an OTA, right? So they get together and they start Roomkey. And they basically try to compete with Priceline and Expedia. And in the next decade, Priceline and Expedia, which have about 95% of the market in the US, they grow to about 105 billion in market cap. And no one in this audience, except for 4 people, could have Roomkey, right? And I doubt that they use it, by the way. And so what is the lesson there? Well, we think the lesson there is you really need to focus on innovation and think about it, and we really think that partnering is the best way to kind of capture that value in the future. What they could have done is they could have gone to the OTAs early on and said, look, we're really good at experience, we're really good at brands, let's partner together, do something together, and let's own this future entity that's part of that. And early, because those companies were so early, they would have loved to have those distribution channels, right? And so instead of right now, hotels paying 25 or 30% commission rates, they could have owned part of this innovation, they could have owned part of these companies and been part of the future. But they chose not to and do their own thing. And the reason that they weren't successful is that to be good at OTAs, it's a different skill set, it's a different employee base than to be good at hotels. Hotels are really good at experiences, they're good at brands. They're not good at search engine optimization, right? Which is what these brands are good at, right? So that's number one. We also think, and by the way, we regularly will poke fun at some of our LPs. Marriott and Host Hotels are 2 of our LPs, and we talk to them all the time about this. But we think they're doing it again with Airbnb, right? Where we really think that the hospitality brands are going to be 2-time losers when it comes to innovation, because instead of partnering with Airbnb, again, doing their own thing, we think the results will likely be equal. I don't know if you saw this, but Airbnb actually sponsoring the Olympics this year. I think they paid about $500 million for that. So they're really, really going after the business traveler. And just like the hotels said, oh, we're not concerned about them in leisure, Airbnb took over leisure, I think they're going to take over business as well. So that's just my own personal perspective. I actually really like Airbnb. They invested in one of our companies together. They're great to work with. They're a fantastic company. Second point, you have to be willing to cannibalize yourself. So the example I give here is a company we invested in called States Title. If you bear with me for a second for a little story. So Lennar is the biggest home builder in America. They build about 50, 60,000 homes a year. They're one of our investors. They were one of our early investors. They also happen to have a company that's the 3rd biggest title insurance business in America. Now, title insurance is not a big issue here in Europe, but basically think about it as an insurance policy against the history of titles within your property. So let's say that someone had a lien against your property several years ago and you didn't know about it. If you bought the property, that person could put the lien on you. Instead, the title insurance policy covers you for that. The way it's done in America is incredibly antiquated. It involves going basically to a county clerk's house, looking through pages, and then deciding the probability of the title having some encumbrance on it. Max, founder of a startup, it was the 2nd startup, came to us and said, look, I've got a better idea. I want to use machine learning data algorithms to create actuarial models to actually underwrite these insurance policies, much like a health insurance policy does or a life insurance policy. We worked with Lennar, who again was the 3rd biggest title insurance underwriter. We came to the conclusion this was a fantastic idea. They thought it was idiotic. They didn't think that Max was going to be able to get the regulations right. They didn't think he'd get the approvals right. And so it ended up that we ended up investing. They said, we disagree with you, but we respect Fifth Wall. That's why we have independence. We're a totally independent firm. None None of our LPs have any say in our investments. And we ended up investing. 2 years later, we were lucky. Max got approval in California. We got Fannie and Freddie approval. And then Lennar came back to us and said, hey, by the way, can we start working with States Title? So what we put together was a very interesting deal. And I'm surprised there's not been more press about this, but what we did was we got Lennar to spin out their title insurance into States Title, create a combined entity where Lennar owned a piece of the combined entity. It's all public, by the way, because Lennar's a public company. And now States Title is slowly going through that company and tech enabling it. So overnight, this startup got the distribution of the third biggest title insurance company in America. And Lennar got to be part of the future because they realized that this old title insurance company was going nowhere. And they would rather be a smaller owner of a bigger pie than a bigger owner of a vastly diminishing pie, right? And so that's what they did. And I give them a lot of credit for doing that because it wasn't easy. It was a very interesting example. The third is that business models are going to evolve and you want to be part of that evolution. I think iBuying has kind of made it to the finish lands, I think. We're starting to see some startups in this area, but think of iBuying or internet buying as basically being able to sell your home online instantly, okay? We backed a company called Open Door, which was really the pioneer in the space. We backed them early. And then what we did was we went to Lennar and said, look, Lennar, you hate working with brokers, yes. You also have a customer retention issue, right? Someone buys a Lennar home, 7 years later they sell their home. They forget they're in a Lennar home, right? They forget this great experience they had. We said, why don't we do this? Why don't we create a program called the Trade-Up Program, where we will target areas where Lennar is building new neighborhoods, near old Lennar neighborhoods. We'll go to those old neighbors, we'll digitally target them, and we'll say, listen, you're in a Lennar home, you've had a great experience. Lennar is building a new home across the street. You want a new home. Why don't you sell your home into Open Door instantaneously? We'll give you a discount on the new home, and you'll trade up. You'll trade up to a new home. We started that program. That program now is creating billions of dollars of sales on the Lennar platform. It's creating billions of dollars of sales on the Open Door platform correspondingly, and it's a win-win-win-win-win for everybody. We're now doing it with a second fund LP, Toll Brothers, as well as Pulte. We have D.R. Horton, Pulte, Toll Brothers, and Lennar as limited partners. So a fun fact, 1 out of 4, 1 out of 5 new homes comes through Fifth Wall every year. Ends up being about 150,000 homes. So we're doing this, and I think what I give Lennar and all these companies credit for is that they saw a real opportunity to see the future. We personally think that middle-class homes in the future will sell through this clearinghouse. It does not make sense to use a broker when you're at that price point. The broker's not really doing anything for you. Yes, when you're buying a $5 million home with 6 fireplaces, you probably need a broker. But if you're selling a middle-class home and you just want instant liquidity, this is the best way to do it. So, the business models evolved, they changed it, and a real coup for us, which was that Zillow started doing their own iBuying because they realized that this is the future. They do. They ended up starting doing this program as well. And we actually, when it happened, people asked me, are you afraid of Zillow doing it, et cetera? I said, well, look, obviously they're a good competitor, a great company, but I actually think it's a validation for the platform. Because when we started Open Door, everyone was just saying, oh, is this going to work? And people are really going to sell their homes online. And all of a sudden you have one of the biggest real estate tech companies that are public out there, Zillow, that started doing it. I think the fourth is that new demand requires really a new approach. And so going back to Airbnb is interesting because they really dominated the leisure space, right? So if you go on vacation, you can get an Airbnb. They really dominated that area. But the future to their growth, and it's no secret, is business travelers. They're not going to be able to grow as fast as they can without business travelers. The challenge they've had with business travelers is that the consistency and quality of the assets by which are being Airbnb'd is not very good, right? So business people generally don't stay in Airbnbs because they have trouble getting into them, the Wi-Fi doesn't work, maybe there's a person there, maybe it doesn't exist. There's a lot of issues that have happened in the Airbnb world. And so what started happening was we noticed that there was this new service layer, tech-enabled service layer emerging within this ecosystem, which was basically companies like Lyric and Sonder that were basically becoming that tech-enabled professional service layer on top of Airbnb assets. They would run it like a professional firm, like a Marriott does. So most people don't know, Marriott doesn't own hotels, they just just run the hotels. So it's very similar to that case. We ended up backing a company called Lyric, and then what we did was we realized that a lot of multifamily assets, so multifamily, it's not a term used often in Europe, it's basically just apartments. So it's big owners of apartments, institutional owners of apartments, were coming to us and saying, hey, you know, we're kind of having trouble renting out this one floor of our multifamily building. Could we put Lyric in there? Could they just run it as a hotel? And so we started partnering with them. So Greystar and Hines are two of our LPs, they're two of our investors. We partnered them, and now they've rolled out, probably at this point, dozens and dozens and dozens of locations where they just run that one floor as a hotel. They run it as an Airbnb, and they do it completely tech-enabled. So unlike a lot of the incumbent hotel managers, they use much less people, it's a much better experience, and it's much more efficient, I would say, right? And what's interesting now is a lot of those multifamily managers are coming to us, and they're saying, hey, you know, these Lyric people are actually pretty good at running a floor of a building. Could they just run the whole building? So I think that's an interesting thing to think about in the future, right? Is that they're really, really good at tech, they're really, really good at tech-enabling properties. And I think there is a lot of potential and a lot of, I think, disruption in the property management space that a lot of these players are going to create. But again, the lesson here is new demand requires a new approach. And what this allowed is it allowed those multifamily apartment owners to tap into the hospitality layer, which they didn't have access to before. And in a lot of cases has higher yields. The fifth one, you gotta own the customer. So I know that there's a lot of people talking about WeWork and what's happening at WeWork and what happened at WeWork. And I actually personally, even though Fifth Wall is not invested in WeWork, we didn't invest in WeWork, I want them to win, I want them to succeed, because they've been great for the real estate community, they've been great for real estate tech, and I think we should all want them to succeed because it is a great story, aside from some of the issues that have happened. It is incredible what Adam built in such a short amount of time, and I think he needs to be given credit for that. However, what they taught the real estate community more than anything to me is that they forced them to no longer treat people in their buildings as tenants, but as customers, right? So what's interesting about WeWork is, despite the mess with the investments, is that most people love being in WeWork. They actually do a really good job from a customer service perspective, right? Most people love being in their spaces. Most people love the offices they have. They really do create this incredible environment. No landlord before WeWork ever did anything close to that, right? None of them had any brand value, right? Most people had no idea who owned the building they were in, right? So WeWork really forced the landlords to say, hey, look, you got to start paying attention to customer relationships. Because what WeWork's going to do, and we told our owners, we told our investors that they were going to do this, was that they were going to go raise funds, they were going to go buy buildings, and then they're going to take your tenants and they were going to move them in their buildings because they own the relationship. So what we ended up doing was we actually worked with Hines, and we kind of kept saying this, kept saying this, kept saying this. It was about 4 years ago. And finally Hines said, okay, what do we do about it? And they were like, well, maybe we should start our own co-working brand. And some of our investors have done that. We think that's a terrible idea, okay? So most property managers don't even clean their own buildings, much less run a co-working center, right? So they just don't have the capabilities. So what we said is, look, let's go run an RFP. Let's go find a brand, or find an entrepreneur that has a company that's consistent in quality as Hines. Hines does Class A buildings, they run Class A buildings. And it ended up being two, Industrious and Convene, both of them are our portfolio companies now. And then what we did with the startups was we said, look, Hines has 22 million square meters under management. Why don't we do a white label offering for them? So basically, Hines could have their brand. It's now called Hines Squared, and then you run it for them. So Hines Squared powered by Industrious, Hines Squared powered by Convene. This actually really took off and was a great idea. They ended up creating a new business unit inside of Hines. You can read about it in the Wall Street Journal. Actually came out a few weeks ago, I think, in the paper on the front page. And this was an amazing thing because it created a new business unit inside of Hines, and they actually got the best of breed of entrepreneur to run it, right? Which was really exciting. So again, I think what they learned is you really got to own the customer relationship. Tech allows you to get closer to the customer. I think the beauty of tech is that it's actually disintermediating a lot of the service layers and the service providers that are in between the landlord and the customer. And we think that there's a huge potential here in the future for new business services, new business units, and new ways of doing things and really retaining that customer relationship. So those are 5 lessons. People also asked to talk about sustainability. And I will say, I feel as an American in our political environment, me talking about sustainability to Europeans feels a little awkward, I have to say. But we are trying. And I will say that I am incredibly impressed when I come to Europe about your focus on the SG. I think you should be really noted for it and for your environmental policies. And I think the EU and the EC, the European Commission, have done a great job in terms of the goals. 40% of CO2 is caused by our buildings. We have to focus on our buildings if we're going to hit the climate goals. We have to focus on our buildings and construction if we're going to help with global warming, which is a real existential crisis for our society. And I don't think that landlords and real estate people realize how bad the situation is. I don't think that they realize, particularly in Europe, how old the stock of real estate is. So you have the most aggressive goals, which you give you great credit for, and you totally should have those goals, and I think it's fantastic. But you also are starting the furthest behind. Your buildings are by far the oldest in the world. Maybe next to like certain corners of China. And so because of that, you've got a lot of work to do. And I don't think people realize how, one, I don't think they realize how old their stock is, and then two, I don't think they realize how aggressive I think the governmental authorities are going to be in terms of taxing, in terms of penalties. I think the solution here is technology. I think the thing that gets a little overcrowded in the climate debate is human engineering. It's just that we've always been good at figuring it out. And I believe that we will. And that's why I'm a venture capitalist, right? I'm there to fund these people. So we think a lot of it is actually more basic. It's venture and it's technology beyond just digital. It's going to include building components, new types of buildings, cement that sucks in CO2, all types of components that are part of that. And so this slide I wanted to show you is from one of our presentations that we've done for one of our LPs. But basically what we did is we said, okay, what would a built world environment, operating system kind of look like under sustainability and circular principles, right? And I think it hits most of the things that most people think, right? It's flexible buildings, design for maintenance and deconstruction, continuous materials, integrated systems, digital technology, wellness and natural systems, holistic urban planning, systems thinking. It's a lot of work. It's a very, very heavy lift, but I do think technology is a big part of this. I think more and more what we're going to do is we're going to be looking at really on a construction phase, how do we reuse materials, not just knock down the building, but take that building, if we're knocking it down, reuse that materials. There are some construction companies now looking at different parts of cities to say, which buildings could we take down to then reuse the parts for a building in another part of the city? I think this is a huge part of the future. I think technology will have a huge impact, but I also think it's going to be a lot of material science. I think we're going to need a lot of material science advancement in order to help here. But I do think that this is the future, and if you look in the US, all the real estate owners are hyper-focused on ESG right now. If you look at Europe, you're very focused on ESG, and there's even more of a strong focus going on ESG. Asia is the same way, and so I think I'm actually really impressed and actually very optimistic about the future for real estate in terms of this principle, because I do think that people are taking it very, very seriously. And I think lastly, so I'll just go back to the beginning slide. So people asked me to give me a little perspective on Europe. So I've been traveling a little bit around Europe. I think this is like my 7th or 8th presentation at a conference I've given in the last 2 weeks. But I wanted to talk a bit about my thoughts on PropTech in Europe. So one thing that I think is interesting is I do think there is a bit of a delay here. And what I've been impressed with is what you're starting to see is that the same kind of concepts and better ways of doing things in the US, you're starting to see pop up in Europe. So things that don't export well, I'll give you an example, right? Open door, right? So open door, we think that is just a better way to sell a home. There are open doors opening up in Europe all over. I don't talk specifically about companies that aren't portfolio companies because we may be in talks with them. But what I'll tell you right now is that concept is a better concept. And I think that that concept is good in the UK. I think it's good in France. I think it's good in the Nordics. I think it's good in China. I think that that is a really good idea. The challenge is going to be for venture capitalists here is that it's very easy to copycat because me and any random person here can put a PowerPoint presentation together and then guess what? We're founders, right? So the real question is when it's easy to copycat, when you have Similar to the phenomenon of Uber, right? When Uber came out of the US, there were probably 30 Ubers in Europe, right? The question then is how you vet those teams to make sure that you know that you're in the right one, because now there's 40, right? And I think that's going to be the challenge for investors in the space here. I think the second thing that is really exciting, for me at least, is that I do think that, look, the US, because of its size, because of its scale, because of the venture ecosystem, some stuff we're just going to have better tech. We're just going to have better technology. Some cases, China's going to have better technology. But in a lot of cases, you get these micro ecosystems that spurn technology that, in some cases, is the best in the world, right? I think a great example is probably Spotify, right? Kind of a household name here, or Supercell, right? I think that all of those, right, are examples of kind of best technology in these different ecosystems that then internationalize. And I think that as the ecosystem in Europe develops, you're going to have more and more of those companies that come to the US and actually prove to the world that they do have the best technology. It is kind of the proving ground right now for a lot of prop tech because of the fact that it's the most institutionalized kind of asset real estate base out there. So I'm actually very optimistic for European prop tech. I think that we're seeing more and more capital kind of come into the space. We're seeing more people interested in European tech, particularly prop tech. And I do think that there is a lot of optimism here. I will say that the LP base is a little more conservative, so not as risk-taking as generally Americans or Asian LPs. But I do think that you're seeing a wave of people coming here, and I do think that the overall institutionalization of European assets is going to push a lot more prop tech because they're going to need to be more efficient. Multifamily, right, an asset class I talked to you about, that's just emerging now in Europe as a big asset class. People are realizing, you know what, it doesn't make sense to have such a fractionalized base. We should have institutions owning these big portfolios of apartments. That makes a lot of sense because then people can have the cost savings passed on. So anyway, that's in conclusion. I'm really excited to be here. Thank you so much for having me, and I appreciate your time.
The first one to be perfectly on time. I appreciate it. Thanks a lot, sir.
Yeah, of course.
All right, we were actually right on time. It's so efficient. It's wonderful. The next one we have, a nice short one about the data supernova. Transformation in the built environment. Digital transformation is fundamental change to our business models and structures of our markets, and changing knowledge and culture and leadership required to enjoy the energy data supernova releases in this emerging ecosystem. So, please we welcome Volker from Iraq.
Thank you for having us here. It looks like PropTech is green. I quite like that color. Maybe that will become sort of global color of PropTech. It's the first time we're here for this event. I really like the layout, the style. So thank you to the organizers for setting that up. I'm Volker Buschel. I'm the Chief Data Officer of Arab. We're a global engineering and consulting firm. Got about 16,000 people, 35 countries. Our business is mainly a B2B business, so we do engineering design, consultancy, management consultancy, all sorts of activities in the built environment to help deliver large and complex assets or large portfolios. And they asked me to talk a bit about where we see data and technology in the industry right now, and then talking about the real estate industry specifically. These are the questions you saw that in the program. This is our founder, of Arab. Some of you might know the company under his name, of Arab. We're a bit of a different entity. We are a membership-based company. We're like a collective. We don't have any external shareholders or investors, so we've grown organically over the years. So the idea of acquisition and growth through acquisition is not really what we do. But we have interesting projects. I'll show you a bit more of the detail of where we see right now the tech questions in this environment. When we first had these talks at these conferences, there was still this angst and this discussion around whether this is actually happening. And I think that's done now. I think the idea that we will continue as Arab as a business or our clients or the value chains we work in the same way is no longer viable. And the notion that we can sustain our current approach to business models, therefore, is no longer viable. So we're at the beginning of a more superlative change than we've previously seen. This is supported by how we work with technology before. So we've, in I think 1969, rolled out our first supercomputer to design the Sydney Opera House, to do the new roof structure there, which we couldn't manually compute. And then we rolled out new technologies across our entire company, usually in 10, maybe 12-year windows. And the industry around us made those changes with us in a relatively organic way. And that suited us well. So every 10 years we had sort of a step change in productivity or business model or the way we approach tech in our business. What we are seeing right now, though, is both in the world that we're designing, but also in our own work, that what Frank Duffy called the stuff, you know, the digital things that go into buildings and bridges and roads and water networks, is now at a point where it's changing so rapidly that we don't think this organic process of a 10-year window is working, and that we're getting to a point where IoT and cloud and machine learning and AI combining into this new environment where we'll see more radical change in the next 3 to 5 years than we've previously seen in the last 10 years. And if that is the case, you need to respond differently, and you need to have a different approach to deal with that challenge. We had this sort of with the smart city and the intelligent building debate a little bit, and then it didn't really happen. And I think the reason that didn't happen because the fifth walls and the investors were not there to really fund disruption, to really come in with some new money and some new talent to say the incumbents cannot just organize the change over a 10, 15-year arc. They need to now change in a much shorter timescale. So the evolution of new technology and new ideas combined with new money that is willing to take risks probably means it's now inevitable, and you cannot step back, and you cannot try to go against this new flow. This is well described by Friedman in his book Thank You for Being Late, where he talked about cloud and technology being a supernova. And when that event takes off, you either get blown away by it, or you basically take that energy and it propels you to your next destination as a business. And that's what we see it. That's why we use the word data supernova in our research framework and in some of the work I will show later. But I want to show you a couple of projects that are sort of big, typical projects Arab does to show where I think the industry is today and bring a bit of realism to the discussion and the changes we're facing in front of us. This is the London Olympics. I think I first started working on that in 2007. So these projects, 2012 were the Olympics. We've got like an 8-year cycle before to get the applications in and to win the right to host it. And obviously you have to build a whole new district, in this case in East London, get all the transport structure going. And it's still going. So the picture over here is the plans that we had before the games, and this is the picture of the place doing the event, and then we are moving now towards actually building that into the real Olympics. The principal technologies we're interested in were connectivity, security, transport, energy, and then we linked it to an economic development program. The technology budget of this program on the infrastructure side was just around £1 billion. The technology program for the team that were designing and building it was about 110 million. So these are the type of technology environments in which we see digital and data now making a change. Another one, not as complex, but as big in terms of its impact, this is the fourth crossing. These are long span bridges. We usually do about 3 or 4 of those somewhere in the world at any point in time. They are complex assets. Again, it's like a 5-year, 10-year design and construction cycle attached to it. This one now highly instrumented with sensors and also technology on it. By the way, when that bridge or the predecessor of the bridge closed, the cost to the economy and the connection between Scotland and England was about £1 million a day. So the availability of the asset and the risk of an asset not being there is quite high, and that's now driving some of the technology work. But when you look behind the excitement of the assets and the excitement of what these things look like, and you break it into the technology that actually goes in, you find pictures like this. So this is a typical site, 50,000 people occupying it, 110 buildings, 110 individual systems all going into these sites, and none of these are really designed or conceived to work in the way the tech startups and the investors and the companies we're meeting here are describing technology should work. What they all have in common is that when you actually want to work across those systems to change security, energy, utilization, comfort levels, the stuff people want to do, you have extremely high friction and through that extremely high cost in working in this technology estate. You also have a procurement machine that is not really designed for startups. So when we worked with an accelerator in London to bring 2 or 3 startups into these programs, they all struggle with the procurement, the risk profile of the startup, and the procurement chain that is behind these mega projects. So what we're looking for is companies who understand that context, who start to understand the large construction or the institutional investors or the large portfolio owners try to operate technology at very complex scales. So when people come, this is a German company called Justitia, who are, I think, spot on in their idea, but they're only trying to change one thing. So in this case, they want to change the gateway technology in buildings into something that is much more scalable and could produce data out of any actuator or sensor or light switch or BMS system into a highly scalable data environment. All of us in the industry want to work with that sort of stuff, but how to get that specific idea that is highly valuable to a point where you cannot just prototype it, but also take it into portfolio scale. It's not just a technology question, it's also a question of what this will do for the owners or the investors behind these assets. And that for us is interesting because it gives us access to validation data when we do design, and it gives the owners operational or performance data about how their assets really perform. We are then interested also in design data. This is a hospital in Turkey where we do structural and seismic engineering, and by changing the approach around technology, we sort of cut the team by 30%. And at the same time could do a design previously not possible in the seismic zone. This is the sort of tech behind it. The slides are all available if you're interested after the talk to look at that. This is our own corporate data. So most real estate firms you find will also have their own asset and property management systems, their own CRM environments, in which they try to organize the naming of assets, the rent portfolio, the void levels they have. And they are currently not organized to work at a scale that really allows us to bring new propositions together across portfolios. And then people talk about this as an idea where they say, actually what we really want to do is not just individual things, we want to connect it around the entire life cycle of the asset. We want to take data from planning into design and construction and operations and renewal or the disposal of assets. But this is not going to happen by chance, and therefore the people who come with their startup idea, that usually is one of these little grey examples that I've written onto that slide, need to understand where they also fit into the overall system. And then the final point, just in terms of the context I wanted to set, is that all of this should be much more driven by the user and the experience they have. I think the previous comment from Roloff about WeWork, I think that we liked about them, is they have genuinely reframed the discussion away from property as a land business with a location value to property as an experience business and a service business. That is a fundamental change in approach. And that's what the industry needed. And at that point, we then also start to consider how the users interact with the building and how the user itself is part of the asset and that lifecycle. For that, we need new technology approaches. So we in Arab are investing quite heavily in our own data infrastructure, and what we are looking for are companies and startups that at the acquisition of data can give us clean APIs or clean interfaces, so we can consume data at vast scales for the work we want to do, And then in turn, we're starting to see clients with large portfolios saying, we don't want a consultancy actually, what we want is data coming back to us out of this winding river, back into our client's business, either as an API or a design or an insight. So when startups come to us, we want them to understand the environment in which we are transforming our business, and if they can be part of that, we can have a meaningful relationship with them. And equally, we're trying to get sort of the leading clients that we have to also see whether we can agree a vision and a roadmap on where we want to get to with this. And property is quite interesting. So we work in property, water, energy, transportation, all the principal markets around the built environment. But we see property as the first one that is really starting to very proactively rethinking how this might work. Residential was the first market. We were not that interested, a B2C proposition around letting and financing and a bit of smart doorbells, which is sort of clever. Okay, so it's probably a big market too. I'm sure it is. It's just not the space Arab is operating in. But it started the discussion around PropTech and what it will mean. And now we're at the space where people are saying, actually, what does it really mean for the large portfolios? This was a study with British Land years ago on, I think it was called intelligent buildings or smart buildings, one of those. And it started to ask the question about what connectivity people want and what environment they want to work in. It's clearly not this, but we are now right back at that question of how do people actually want to work in this space and how do they relate to the space they work in. That's where WeWork came in, as I said earlier, and started to change the paradigm and started to say this is not just about the location, it's actually about services and experiences. And you can build a brand around that that you then can market and raise money against. Whether they have overacted that, now to taper the spec a little bit is a different discussion, I can't really comment on that. But the principal new idea that they've pushed, I think, will stay, and the industry will have to respond to that. If you can run your asset at 80% utilization, you basically have a better return on capital than currently the portfolios that get to maybe 60%, which is where most of the institutional owners and the corporate owners are getting to. And they changed that. We then have some owners who have large estates, and they make another leap. They say it's not just a building, what we really want to create is a destination. What we want to rebuild in London, for example, the Crown Estate, is all of Regent Street, or the entire West End, or what Google is trying to do in Toronto. I think that's another interesting area. It's not as scalable, it's not as repeatable, because it's quite difficult and expensive to create these destination strategies. But again, in these projects, we will see very interesting prototypes and new ideas growing up. In all of that, we think, and that's probably the challenge with the Google program or the Sidewalk Labs work, is that currently the definition of ethics and the mandate and how this solves the grand challenges around sustainable development goals has to be built in from the beginning. The idea that you can build a business in real estate or in PropTech, and then at the end you try to justify how that makes a contribution to sustainable development goals or how it deals with climate change isn't going to work. The idea that you can monitor employees' movement for comfort levels and for utilization studies and for better work experiences and not have a very clear strategy around the ethics and the mandate about the data that you're collecting, we think will not work in most locations. So this question of ethics, mandates and grand challenges has to move to the beginning of an investment and a strategy rather than an afterthought later on, because the time when that is sort of acceptable, we think is no longer valid. So in summary, we see the change from in property, people focusing on connectivity and efficiency, adding to it experience, but ultimately trying to change the business model around the asset into something that has still value of land at the core, location, location, location. All of us in the industry who worked there for a long time had to deal with that, which determines the value of a building to an extra layer on top of that, which is the value of the services and the brand that you can create around the experience and the services you create. You then need to be able to take that across the portfolio. One building itself is not worth it, so when we have a startup coming to us with a brilliant idea, and we look at that, we look at the technical debt and the commercial debt in the idea and how that would actually work across hundreds or thousands of assets. That means you can build new value chains where you can do the plan, decide, design, construct, operate and maintain. Through that you will get the cost of operations and the value of land improved, but you also build a platform to think about the sort of humane and sustainable approach, the property as a service, and how that changes your brand and your business. And we think most of the innovation will be driven by the purple top slide rather than by the bottom slide. And the bottom one will be beneficiary. It's almost like a byproduct of this newer approach in real estate. We found, though, in execution, that this is not just about technology, and there are several issues that need to be addressed. And as an industry, at some point, we need to come together to be able to solve meaningful relationships in what is a complex ecosystem. These 6, I don't want to go through all of them, but the 3 that stand out that we come across all the time. One is organization. So as a chief data officer, I'm looking across the entire data activities and architectures and business models we run as a firm. There's probably half a dozen counterparts right now I could go to, both in our clients and our supply chain, who have a similar role and a similar strategy in play. So how can we get organizationally to a point where we really can connect as key stakeholders in an ecosystem with much more consistent execution happening at scale? Money. We still see fundamental disconnect between the small startup world of 1 to 10 million revenue with also interesting ideas floating around, going from the 10 to 100 and then maybe something bigger, and how that aligns with the business models of the established players. So we are a 1.6 billion business. Most of our clients in property run 10, 15, 20 billion portfolios. So how do you connect together these different business models and these different financial flows into a better setup? And then thirdly, the technology itself, we see loads of ideas that are just not scalable or don't understand the broader systems and technical architectures in which they need to fit in. And I think that's okay for a B2C or for a consumer proposition, but for the big portfolios or the big infrastructure pitches, you need to understand the overall technology stack. So, pinballs, slides, we all still like them. My team always wants an office where that's the case, but it's not enough. So we need to have an understanding of the investors landscape, the knowledge, practice and culture changes, what the new technology roadmap is, and then fundamentally, what is this new business model that we want to enable? To do something about that, we are launching here at Recotech a report. It's part of our research. These are different things we've done since 2010 around technology in the built environment. And the latest one is our contribution towards this around the digital twin. What we've done, we I think interviewed around 70 different clients, academics, thought leaders, all sorts of professionals around the world, and wanted to come up with a definition, some types of what digital twins could be, and maybe a metric to really assess good and bad and have a bit more comparison, because we were concerned that this is going to be another initiative that ends up on the sort of scrap heap of the digital hype cycle, where it is very exciting at the beginning and then quite meaningless when people get bored of it. So with this report, we wanted to give it a bit of structure, but also invite others to perhaps contribute or build some new constellations or networks around it, because we do need a narrative and a way and an approach where we can coalesce around these ideas, so as an industry we can change and not just as individual companies. So please download the report, share it with whoever you want to send it to, or come back to us with your ideas and suggestions. That's all I have to say. Thank you very much for having me here.
Here we go. All right, we have a really quick 10-minute presentation, and then we'll go to break after that. So we're talking now about optimization of building technical systems with digital twinning. I've never heard that term, buildings together, but combine building automation system data with BIM, building information modeling, which I love, and into the digital twin of the building. And to help us with that is Marco from Recotech, Recotech. Get 10 minutes and we'll go to break.
Hello, my name is Marco Tulamo and I work in HVAC design unit. In there, we do building technical designing like heating, cooling, and air conditioning. In Sitowise is a design and planning company. We operate on construction field in Finland. We have infrastructure, building, smart city, and project management services. My topic today is optimization of building technical systems with Aura digital twinning. Most buildings that we see around us are not optimized. What I mean by that is the technical systems like heating, cooling, and air conditioning are not performing on their best performance level. And this may cause because there are malfunctions in design, in operation, or in construction phase. But these buildings are like data banks. They store a lot of data inside the building. But actually that data is buried inside the building, in building automation systems, where it's hard to analyze. But if we can take this data out from the building, analyze it, then we can optimize building technical systems. So what we have created is our service, which is actually a digital twin of a building. We wanted Aura to be visual, so it's a virtual model. You can go into the building and see the technical rooms as they are in real life. Aura also can give you analysis about the building technical system performance. It can also give you statuses. Is the technical systems working correctly or are they not? And where the malfunctions are. And Aura can also give you continuous monitoring, which means it can monitor present time, but also the history state. If we compare our service to conventional data management, on your right side you can see an air handling unit that has 27 different variables and over 500,000 data points. In big buildings like hospitals, office spaces, retail centers, they may have over 50 of these air handling units. And this is only 2-week data set from one air handling unit. So the task is enormous if you have to analyze all that data by yourself. So we definitely need digital services to get better understanding how technical systems are working. If we go a little bit deeper in our service, here you can see that the Aura is actually a virtual model. There's a 3D city model on the background. And then we have integrated the BIM model in the center. And there is also, in the building information model, there's the HVAC system, which you can see all the brightful colored ducts and air handling units and pipes on the top of the building. So here we have the virtual model, all the technique in the building. And if we go a little bit deeper into the virtual model, in the machine room here, you can see the actual HVAC machine on your right side. And there we have brought all the data from the building into the virtual model. And that's why we call this a digital twin. You can read the sensor points if you want to. You can acquire the data from the building. You can select the data points that you want to follow. You can draw different type of graphs if you like to. For example, here, this orange is supply air temperature and the dark green is the set point. And on your right side, you can see that the supply air temperature is oscillating. So this is malfunction of the system. And Aura can detect these type of problems in the technical systems, but basic building automation systems cannot. Aura will also give you a status notification notification on the screen right there, and you can also have notification history where it says when it has happened, the malfunction, and where. And then you can also send it via email to a third party if you wish to. And there are also other analyses on the left side corner. If you go a little bit deeper into virtual model, there are office spaces, negotiation rooms, and here we can gather the data from building automation systems, or we can put sensors in the building, and we can start analyzing, for example, indoor air quality. Are the targets met or not? So basically, Aura is giving you all the options of data management what you need. But we are not just interested about analyzing the data. Aura gets the data from the building automation systems. It's analyzing it. There are smart algorithms that analyze are the technical systems performing as they should be. When Aura finds malfunction in the system, we want to conduct repairs. And if the repairing needs designing, project management, contacting the contractors, Visa will do all that. So we want that building systems are optimized. We are not just focusing analyzing the data, we want to conduct repairs also. And when we have done the repairs, we start to analyze how the repairs have been working. So that's how this is an iterative process in order to get optimized technical systems. So, benefits of Aura. We are building these buildings and technical systems for people who are using actually the buildings. If there are malfunctions in the systems, the technical systems, typically there's indoor air quality and environment goes down a lot. So we want to create as good indoor environment for the people who are using the spaces as possible. We also want to help facility service management companies to have better understanding how the building technical systems are actually working. Building owners also get increased investment value due to the satisfaction and energy savings, and also the technical benefits that we have gone through today are that Aura's visual, its virtual model, it's actually how the building has been built. It's comprehensive, you can almost analyze anything you want, it's continuous, and it's smart. And if we want to build these smart cities in the future, we will also need smart buildings, and Aura will make the building smart. So, if you're interested about data management in general, or you have a building that is technical system need optimizing, please contact me. Thank you.
Thank you very much. I have a quick announcement. There is a reminder for the after party. The after party will take place, I'm reading this, by the way, at the Cock. If you can't find the Cock, maybe you can pull it up on your phone, so maybe it'll find it easier than others. It's a 5-minute walk from the famous White Church and a 10-minute walk from the main railway station. You can find most of the people in the basement around 8 o'clock, and the first 50 people that show up will get free drinks. We're going to take a break until right exactly at 1600 or 4 o'clock. We have 2 more great presentations, so please come back. Thank you very much.
Kun pitää 4 lähteä, siis se pitää vasta 9 mukana. Mikä varmaan minimum lähtee 4 koska mä en uskalla jättää kerran kuukautta. Niin, kato, pitää mennä läpi. Ei tässä ole 4 näin sitä näin. Siellä oli sitä mielenkiintoista.
From
Tää ei ole mennyt ihan aikataulun mukaan. Tää aina on. Hyvä tuhat henkeä saadaan kerättyä tämän homman ympäri. Muutama vuosi sitten. Muutama 10 henkeä. Me teitte. Mitä se näyttää teidän puuhataan? Okei.
Volvon jälkeen on pölyputiikkiin taas. Pikkasen kaksi tulee
Noin montaa kuitenkin. Mähän jäin pois kurvaan.
Okei. Luvatko Suomen täysin vaan?
Joo.
Mä jätän
kaikki paitsi tämän tiedisteen Recotechin. Perustin tämmöisen firman, joka startup-teisiin aika tarkkaan skouppia. Sitten mä oon aikanaan, kun menin, sai 10% tai jotain ostaa saa myydä siitä. Niin, tosiaan oli 50, alastiin 500.
Joo, kasvu.
Ja se ei ole pelkästään liikevaihtoa, kymmenkertaista.
Niin se kyllä. Joo. Niin on just
näitä mä en ole jonkunmoinen asuntoportfolio.
Joo.
Sieltä pois. Mistä niin? Ihan pyöritellään sellaisia operatiivisia hommia, eikä hallituksia tätä tulee pyöritettyä. Mitäs? Saat vaikka mitä suunnitaan?
mitä mä oon? 52. Joo.
No, mutta oli mukava tavata. Ei ole mitään tykännyt, mutta täällä olikin jo loppunäköjään.
Just kuuletko nyt siis Recotechia vielä?
Joo. Niin, haskalla.
Pari.
Tuolla oli toi nytkin. Unleash the Innovation Innovative Power. Garage Stage, joo. Wiki. Wake. Herätysjärjestys.
Tunti vielä.
4. Joo, Panoviskassa. Eikö se on? Joo, toi on.
Karots puolesta.
Tää on Water Truffino.
Joo.
Mä en sen häntä kuulu. Joo, ja sit näyttää olevan meidän pojat toisella alalla. Ainakin taputtamassa loppuun pääsee Jees.
Ei mitään. Törmäilevä.
Here we go.
Content to continue here, although he needs no introduction. We're talking about unleashing the innovative power, how fast real estate is changing right now, and the mega trends that are out there with some examples. So, without further ado, Walter Trufino from Global Recotech.
Welcome everybody. Let's start with something that happened yesterday, or not this week. So what is this about? Tell me.
Winning.
Winning? Yeah. Tell me more. What happened to the Finnish football team? You're going to, for the first time I think, to a Euro Championship, or not? First time ever. So congratulations on that. So I have a question for you. Are you ready for change? Who's ready for change? Some people are? Well, this presentation is going to be a little bit fast, I think. First I want to start with 2019 so far. We have an increase in investments in PropTech for 607%. We have now 222 unicorns in PropTech, so not all in VTS has joined the club this year, and nearly $13 billion is already invested in PropTech since January till September. And fifth wall, you know, Rolf Akkerman was on stage a couple of hours ago. They have raised a new fund with, filled it up with $503 million. So a lot is happening in real estate and about innovation within real estate. Before I would like to introduce myself, I would like to introduce you to one other people, and he's from the UK, and his name is Anthony Slumbers. Who knows Anthony Slumbers already? Well, please start following him on LinkedIn because he's really amazing. And Anthony is writing a lot of stuff about how artificial intelligence is changing real estate. But also, he did write an article about the winners and the losers in PropTech. So we are all winners or losers? We are all winners or not? So the winners understand the speed of change, and the losers don't follow the tech industry at all. Winners build, measure and learn. Losers just stop at building stuff. Losers look to be 10 times better, and losers thinks to be 10% better. And that's a huge difference to do it like 10% better or you do it 10 times bigger. So that's a big change in mindset, and we're going to talk about that later. Now this is me, Wouter Trifina from the Netherlands. Last week we won the Global PropTech Award, so that was really amazing. That was in New York. We got the award for Best Association. I'm one of the 50 future makers of the Netherlands. Worked in construction and real estate for over 15 years. And 4 years ago we started in the Netherlands with Holland Contact and PropTech. And a year ago we started with Global PropTech. So really short what we do in the Netherlands, we really help 200 companies right now to do things better. We help them with challenges, with questions that they have, and we match them with the right startups, scale-ups, technology companies. We are building up an investment fund right now, and we're really here to accelerate the industry to move forward. So one example of that is this company. It's called Reborn. It's in real estate developers, and they ask us like amazing kind of questions that we can help them with to really create the buildings of the future. And one of the questions that they have right now is what kind of measurements do we take care of on our rooftop if we want to land a drone on it. So they really want to make like a drone platform on their buildings. So if somebody knows the answer, please come to me because I don't know it myself. And we can help you to connect them to this company because they're really looking to do some great stuff. So at Holland Contact we have now 12 members, employees, 200 members, 80 corporate organizations, 120 techies. We do a lot of stuff, and we're now in an office of 30 square meters. So I'm really glad that we move over. The 1st of December we go to an office that is a little bit bigger, so we have a little bit more space for our employees to do even some more stuff. At Global PropTech, we really have the ambition to really inspire 1 million people within real estate, because I like these events like Recotech and last week the Nippon PropTech, but it's just a couple of people, or maybe 1,000 people that go there, but not everybody from CBRE or the other companies are allowed to come to these kind of events, and we need to inspire them also. So we are doing, for instance, online events each quarter to really get people their attention and to bring them cutting-edge PropTech insights, and those events are free to watch. And sometimes we do also Global PropTech Leaders events. We do them during the big events, during Expo Real or the MIPIM in Cannes, where corporate real estate leaders come together and we match them with the right PropTech companies. Everything that we do, we make videos of and we put them on a YouTube channel. So on our YouTube channel you will find a lot of videos, a lot of content about all the different speakers that we have on our stage, online or offline. You can watch it whenever you like. So I have one question for you. Oh, Kodak. Who knows the Kodak moment? What happened at Kodak? Who can tell me? Somebody? Somebody knows what happened at Kodak. What happened at Kodak? I'm sorry? Yeah, they ignored the digital because they invented the digital camera themselves. And one of those employees said, well, I have a digital camera. And he went to the boardroom of Kodak and he said to the boardroom, well, shall we sell this digital camera? And then the boardroom said, well, we're making those film rolls and that's our business model, so we're not going to use the digital camera. And so 5 minutes later he was back in his office and the digital camera was put in a case and nobody knows about it. And 2 years later Instagram was on the market and Kodak was gone. So that went really fast with Kodak. And you see this kind of Kodak moments a lot in real estate right now. People with great ideas, with great minds, trying to create new business, go to the boardroom and 5 minutes after they're back again in their offices and nothing has changed. So we really need to wake up. So my talk is going to be about the speed of change, about the future in technology, about what can you do to be prepared. So let's start with the speed of change. Who knows this guy? It's Peter Diamandis. Yes. And Peter Diamandis is from the Singularity University. And at the Singularity University they look at all kinds of different industries. And they also looked at the real estate industry. And this is what Peter Diamandis is saying about the real estate industry. He says, well, it will be displaced by, in the near future, and everything that we do in real estate is going to be done by artificial intelligence. And then the last sentence is really amazing. You know this solution is not coming from the real estate industry. But who is? If we are not going to do it, who is going to bring the solution? So, who knows the Rubik's Cube? Can somebody solve it? Who knows to solve the Rubik's Cube? My son is 9 years old and the blue part is a little bit solved already, but it's not done yet. Nobody knows how to solve it? Sometimes I have somebody in the audience and they say, well, in 15 minutes I can solve the Rubik's Cube. But I will show you how fast the world record is. You can put the sound a little bit down. This is the world record, and this guy is just looking at the Rubik's Cube, and when he's finished looking at the Rubik's Cube, he will put his hands on the stopwatch, and now he's solving the Rubik's Cube in just 7 seconds. So that's fast, come on. But do you think this can go faster? Is it possible to do this faster? Yeah, do you think so? I will show you. And that's 0.7 seconds. So that's not 10% better, like Anthony Slumber said, but it's 10 times better. And these guys, well, these are just, what are they? Whiskets, nerds? And they just look at processes. Well, we can do this 10 times better. We just make an algorithm on a computer, we build with 3D printing, we build a machine that can solve every Rubik's Cube that you put in there. Doesn't really matter, 0.7 seconds and it's done. So these kind of people, if you have them working at your office, they will look at your processes a lot of it, a bit different, in a different way. So the future in technology, I have a couple of friends, and the first one is GAFA. Who knows what GAFA stands for? No idea? Yeah, cool. Google, Apple, Facebook, Amazon. That's really smart. What are these companies doing in real estate? Let's go through them. First, Google. This was last week in Manhattan. In Manhattan, you have now these kind of poles standing on the street, and you get free Wi-Fi. 10 years ago, you had those telephone cells when you went to Manhattan or London or somewhere else. You could call home. Well, Mom, my flight went okay. So I'm now in London or Manhattan. But we now all have those smartphones, so you don't need those anymore. So they removed all those cell phones in all those big cities, and they replaced them with these kind of poles where you get free Wi-Fi. Would you connect with free Wi-Fi? Who would connect with free Wi-Fi? No, I would. And if you do that, well, if you look at the numbers, in September 2018, 1 billion total users and 5 million monthly users. That's a lot. So Google knows where people stand still, where people go into a shop, how long they stay in the shop, when people go out of the shop, where people stand still to get a taxi. Google knows everything. But Google is not going to use that data. Or are they? Yeah, they probably are. So this is Sidewalk Labs, probably you know about it. Google is developing a new smart city with the data they can collect, and maybe to create also like free housing on that. So that's amazing. Google building cities, but that's what we do as real estate developers, not Google. But they are actually doing it with their Sidewalk Labs program. And it's really amazing what they do with generative design, building with wood and all kind of stuff. So and then this one is also in Europe. This is a retail center, and the retail center is called Chelsea Market. And Chelsea Market was being bought by Google for this amount. But Google buying real estate, that's what we are doing as real estate people. Why is Google buying real estate? So if we look into that, Remco van der Meij from GLL, he said, well, images, Google is using some smart sensors and artificial intelligence to analyze the customer behavior, that they can do some stuff, some crazy stuff to optimize the design of a shop. And maybe we don't know that as real estate people. So it's not about the bricks anymore, but it's about what is happening inside the bricks. So then the next one, that was Google. This is Apple. Apple's new headquarters in Palo Alto. And to build this headquarters, they needed to have like tens of construction patents to really make this office, to get this built. But are we going, as a construction people, are we going to ask Apple how we need to build offices? Well, they have the patents. So that's crazy. It's really crazy. And then the next one, this is Amazon. This is a Dutch article that was on the Financial Times of the Netherlands in 2017. And this is the CEO of ING talking about Amazon as the biggest threat. And 2 years before, so in 2015, he said, well, those fintech companies that are entering the financial industry, they are our biggest threat for us. But now, two years later, in 2017, he said, well, we need to work together with those fintech companies, like the PropTech companies from real estate. We really need to work together with them because they are fast and they create new business, but we have the skill. So we need to work together with them to hold Amazon off a little bit. But well, let's dig into Amazon a little bit. Amazon, it's the $1 trillion value on the 4th of September, and they really made like 2 billions of profit each quarter. 2 billion each quarter. That's a lot of money. That's a lot of money. But Amazon and real estate, the only thing Amazon does is deliver a package at our home, and then it stops. Well, then it goes pretty fast, because Amazon did buy Ring, a startup, a doorbell, for $1 billion. For them it's just play money, but it's a lot of money. I suppose would I have invented this doorbell. But it's a smart doorbell, so when the delivery guy is entering your home and you're not at home, you can open the door from a distance, from your office or wherever you are, just by your smartphone, you can open the door. So then Amazon enters your home, leave the package and go out. But then Amazon is already in there. So, and then it goes fast. So this is February 2018, and the next one is the 9th of May. And then they are going to collaborate together with Lennar. And Lennar is like the biggest real estate developer in America. They do like 30,000 houses a year. And they say, well, we're going to do smart houses. So we're going to implement Alexa and all kind of other sensors from Amazon. So then they are really into real estate. And then just a couple of months after that, in September 2018, Amazon is investing in a prefab startup. So from January, from a doorbell, to 9 months later, well, let's build the whole thing. That's just crazy. And they are not going to stop. They are in real estate, Amazon, if you want it or not. And this is this year, Amazon built like a turnkey platform, so you can buy and sell your house on a platform. And they do this together with some big corporate companies that are working in real estate. So they work together with them. And that's not the end of it, because this one is October 2019, so a couple of weeks ago. They are also investing in a smart apartment platform. So Amazon is actually doing everything within real estate, everything. They are not going to stop. So my question to you is, what happens if the industry gets disrupted? Please start working together with those companies. Start working together with those companies before it's too late. Yeah, I have one bonus trend for you, and that's the percentage. 94% of all innovations are coming from outside the industry. And this number is valuable for all industries. So if you're working in energy, or in financial, or in some other industry, it doesn't really matter. 94% of all innovations are coming from a different kind of industry. So we really need to start looking about what is happening in different kind of industries and what can we learn from them. This is a really amazing sheet from one of my other friends, Dan Hughes from the UK, and he has a sheet about technologies. Well, on the left top, you really need to know how the technology works, which technology has impact right now, and which technology has impact in the future. And here are all the technologies coming. Oops. So data, BIM, drones, you really need to know how it works, machine learning, artificial intelligence, but maybe blockchain is a little bit further away, flying cars. Well, flying cars, well, that's not there yet, maybe first self-driving cars. But the real estate developer that I was talking about from Amsterdam is really want to know how are we creating a platform on our rooftops to really make use of flying drones. So it is coming there. And this was me a couple of months ago actually. I was asked to give a talk in Colombia. And when I was on the plane to Colombia, I thought, well, it is not possible that they are farther in implementing technology than we are in the Western world. It's not possible. In the back there was the head sponsor of this event, and I was talking to the director of innovation. And he told me some amazing stuff about what they were doing and the companies that they are working together with. And one of those companies is called Waze. Working together with Waze. I don't know a real estate company in the Western world that is working together with Waze. That's crazy. And they do it in Colombia. How is that possible? So maybe they are lagging behind a little bit, but they can make a huge step because they don't have like a background or a lot of legacy in adding some technology or digitalization systems, so they can make a huge step at one point. Working together with Waze is, I think, really amazing to get some of their data and to start working together with them on how people move around properties and real estate centers. So that was really amazing and a great insight from Colombia, I think. So they also start working together with technology companies. So, what can you do? Be prepared. The last part of my presentation, and we bring out an overview together with KPMG each year, where you can find all the PropTech companies in there. This is just one slide where you have like the overview. In the book you have one page of each company that is in there with a little bit of in-depth information about it. If you really want to have it, just send me an email and I will send you the PDF. We always bring this out each June of the year. And I always like to share the stage, so I did bring one company with me today from the Netherlands, and I would like to give the floor for a few minutes to Thijs van der Burg from OfficeApp. Thijs, here you go.
Thank you. And welcome. So, my name is Thijs van der Burg. I'm the CEO and founder of OfficeApp. We are the most advanced tenant experience platform in the world, but mostly in Europe. We focus solely on Europe. And I want to talk to you today about providing ROI to our corporate customers and our landlord customers. So how do we provide ROI through improving tenant and employee retention? So we see in the overall market that there's a huge demand in making sure that the solutions that we provide inside an office building have actual use and bring impact to the office buildings itself. So to make sure that your tenants and your employees are loyal and are able to have a good experience in their office building. So we started developing, about 5 years ago, we started developing a platform that is solely focused on integrating with all systems inside an office building to make sure that there's on the front end side, so on the user side, employee side, there's only one solution that they have to use. So we integrate with access control systems, facilities management systems, parking management, room booking systems, any system that you can think of is integrated onto our platform and is provided in a single solution on OfficeApp in this case for employees to very easily use all of those functionalities. In the application we focus on everything related to facilities, community and amenities. So what that means is that with OfficeApp you can book a meeting room, you can reserve a parking space, you can get access through your mobile phone. But you can also be part of the community and communicate with other people in the building and use services and amenities that are inside the office building. And we don't do this alone, so we integrate with all systems inside an office building. And we currently already have 45 different integration partners, ranging from sensor companies to access control to facilities management systems. And we are an agnostic system, so we don't have any preferred partners. We work with every partner that you can think of inside an office building. And we are already active in almost all of Europe. We have 300 buildings under management, and we have customers such as Signa, Entra, here in the Nordics, UBS, Dell, Nokia. So we provide our solution to landlords, but also to corporate and enterprise solutions, which is very interesting because we not only provide a solution for the single tenant inside an office building, but also from a landlord perspective. We believe that that's necessary because we believe that there should be one single point of entry for an employee working in an office building, whether that's for a tenant perspective or that's for from a corporate perspective. So to provide you a bit more information about the functionalities that we offer is that we provide, for example, a community. And one of the most important things is that on the user side, you can very easily get connected to other people in the building. But what does that mean? What is the solution that then you provide inside an office building? You provide more loyalty from employees, you provide better community, and you provide more cohesion inside an office building. So people feel that an office building is connected to you as a person, and that you feel connected to a building. And when you are connected to a building, you're more likely to stay at your company or provide insights to your superiors to say that I really love to be in this building, I want to stay there. We focus on floor plan experience. Is also one of the 58 solutions that we provide, and we provide through this a much better office experience, a much more personalized office experience for you as an individual. There's room booking, where we try to focus on making sure that we improve booking experience, but also provide landlords and enterprises insights on how they can optimize and utilize their office space and their meeting rooms and desks more efficiently. From a landlord perspective, it's much more focused on how can we provide additional revenue models in that sense. You see that my time is, so I'll keep on going. And the services and amenities side is much more on improving tenant-employee service, improve tenant and employee service level, and attract new additional revenue streams. We have a request maintenance functionality that is very well connected to an individual, so it's very easy to report a problem, but it's also directly connected to any kind of facilities management system. So all of the employees are optimally the entire process of reporting a problem is fully optimized. And the most important thing is, because you have all of those functionalities in just one place, we optimize the adoption, so the number of people who actually use these solutions, and we optimize the engagement as well. So if you have a very good solution, if you try to focus on building a solution that, and you implement it, it doesn't bring any real value if people don't use it. So it's a vital part of bringing success to your office building. And I think one of the best things about the entire solution is, because we integrate all of the solutions, so an access control system, a maintenance system, they used to have all of the data points in their own silo. And because we now connect to all of those different systems, we centralize all of the data, we give insights in how you can optimize your office space, how you can utilize your office space better. And then that gives you a lot of great insights and actually to perform, to make sure that you provide a better office building. We also do that with the engagement data, so the data coming from the users, and making sure that users have a better office experience. So we provide a better experience on the front-end side, so for the user, but also for tenants, property managers, and landlords. So thank you for listening, and let's create a happy office life. Thank you, Wouter, for your time.
Thank you very much. So we talked a lot about technology. but I think it's more about than only technology. It's about people, about new ideas, and bringing those together. And that is not easy. When we were young, it was easy to play outside and to make mistakes and to learn from that. But in corporate life, you cannot make that many mistakes. Innovation is a tough job, and you really need to be a winner with the best people on the boat in changing circumstances. You really want to be the first on the finish line. And that is hard work, really hard work. So it's about technology coming together with people. So I have a question for you. So please look to the screen and react as fast as you can. What do you see here? Tell me, what do you see? Alcohol. Yeah. You see a bottle. Yeah. I see a bottle too. What else do you see?
A couple.
A couple, yeah. I'm sorry? It's on water, it's floating in water. Yes, I see that too. What else do you see? Dolphins. He's crazy or not? Who else is seeing dolphins? Yeah, so let me help you a little bit. Did we see dolphins right now? Or did we see dolphins right now? Everybody sees dolphins? So that's crazy. When they show this picture to adults, we always see a man, a woman, a couple, a bottle, that's what we see. But when they show this picture to children, they see dolphins. So what is it really that you are seeing? And that's actually the same what has happened at Coda. What do you see? Do you see a new business model with a digital camera? Or do you see the old business model? And that's what's happening right now in real estate as well. In all kind of boardrooms. What is that we really want to see? I will skip this part because it will take a little bit more time. So it is about getting your brain and your body, your energy together, and to do new stuff. So it is about mindset, it is about culture, it is about inspiring people, it's about unleashing our potential because we're building the built environment. And it's about doing things 10 times better because that is possible if you believe in it. So why do we need to innovate? This is a great research being done by CBRE, I think. Who is drinking coffee? Who is? Well, if you stop drinking coffee, you get 45% more energy. That's a lot. So, and then I'm not talking about these kind of numbers, but this is like a crazy, a really good research being done by CBRE about healthy offices. You really need to look into it. So, 40% of the total CO2 emission is the responsibility of our industry, construction and real estate. Just 2% by planes. We really need to do our job a lot better, because otherwise we get this kind of strange weather, hurricanes. Jamaica doesn't exist anymore, but we also get a lot of migrants because of not having enough water at certain kind of places. People leave, and we should do a better job as a real estate industry, I think. This is also really amazing. This is a video from NASA about the North Pole. And you see on this side, you see the age time of the ice, 4 years plus. And that's just decreasing really fast. This is 1991 right now. If we go a little bit faster to 2014, it's just, well, there's no more ice that is that old left anymore. So it's changing really fast, the environment on Earth, and we only have one. So it's time for us to really start thinking differently as a real estate industry. And that's really our priority. So at Global PropTech, what we do, we build a plan for every attendee at one of our free webinars. So you can watch for free, you have no flight cost, you have no expensive booze, we don't use materials, and we still make the world a little bit better by planting a tree. So I would like to encourage to do also something. So the first 4 reasons to innovate, I think number 1 is pretty easy. The end user really wants to have a healthy office, a healthy environment, a healthy house. That's what the end user wants. Business wants to have a productive and happy workforce. And that's what we can create as a real estate industry. Technology is changing the business incredibly fast. We talked about this a little bit. And then the world is slowly being destroyed by technology. So we really need to do a better job. So my question to you is, what are you doing in order to create a better built environment? What are you doing? So what do you need? Real fast, you need two things. You need a data strategy, you need a technology strategy. I see so many real estate companies that don't have a data strategy yet. They have an innovation strategy or something like a vision, but really have a data strategy. What are you going to do with it? How are you going to create value out of your data? That's really important. And which technologies are you going to focus on? Because if you focus on everything, that's not possible. So then the three factors that determine success is you really need to have the best team on board. We see many companies that have like employees at their office that have a little bit of spare time, and then they got the duty, well, you do some innovation stuff, you implement some new technology. Well, that's not the smart way of doing it. You really need to have your best people on board to implement new technology. And if you then do that, really think about a big problem that you can solve, because there is also a big business. Of course, start small, but really have a big problem that you have a solution for. And then the number three factor is, of course, use super technology, because then you can scale with one push of the button. So my conclusions of this talk: involve the end user, because that's what we're doing it for. Share your story with the world. We are creating the built environment, and we need to be proud of that. Obtain knowledge from other industries. 49% of all innovations are coming from a different industry. Work together with those tech companies as fast as possible. There's a lot of tech companies, you can just start working together with them. And of course, unleash the innovative power, because we can do this. That was my talk, thank you very much. So my question is, are you ready for change? We are. Thank you. Thank you.
All right, we have one more left. The last one, and maybe not the least, maybe the best. Who knows? We'll find out here real quick. And thank you all for hanging in there. The next one talks about using design to humanize real estate. Like from a standpoint of safety, what people should feel safe when they're moving, and things of that nature. So here's voice from Nublet, operator.
I'm always the chief designer at Nublet. I've had a few jobs at the company. I started out in the technology side, and then I moved into the finance department, and most recently I moved into the only job I actually wanted, which is the design side. The best way I can summarize those past 7 years is that I've just continually fired myself and hired much smarter people than me to replace me in those roles. And the key in that is finding people who are very different. And I learned that lesson from the two guys who started Nublet, Harley and Joseph. Harley has a sleeve of tattoos on both arms. Joseph has 0 tattoos. He has 6 kids. He has 1. They really built Nublet on the principle that you find people who are radically different than you. You build a company that's not just for yourself, but for people who just to embrace diversity in that. And as a result, we have a workforce now of over 498 people. I think we just hired someone, so we're at 499, give or take. We've moved over 50,000 people in Brooklyn since 2015 and processed over $96 million in rental payments. And the question is, how do we get there? The core thing I believe is that empathy is the foundation of design. You have to really feel the same pain that your customers are going through. When I moved to Brooklyn, I lived in a studio apartment with 4 other people, and I really understood the value of rooms, walls, and choosing the right roommates. It was quite the experience. The next part is that I've done every job at Nublet, so I've been the receptionist, I've been the bookkeeper, I've done every aspect of the company, largely as a way to understand the struggles that everyone at the company goes through. When you have someone who's doing a reception job, there are struggles that they go through that, as the founder of the company or the executive, you're usually out of touch with that, and I've tried to dip into each job, and that's key. And going from there, that design and branding are the core differentiators differentiators for your company. When you think about something like Instagram, 80% of the screen real estate is dedicated to some sort of visual. And so in a very visual and noisy environment, how do you stand out? And so just to backtrack a little bit, for myself, I got into design, I would say in the dark ages of computer design. I woke up and would see this weird lawn on the computer, and I started getting into computers and design by building replacements for that green lawn. And as I started doing that for myself, I started sharing them with my friends and their family, and they started using them. In that moment where you go over to your friend's house and they're using something that you created is, I just blew my mind. And the key, just to kind of like hit on that point, is that for me, design is all about creating things that other people find useful. And so bringing that now back into real estate, I think an aspect to real estate that a lot of people don't think about is the safety side of it. And what that really means is that the experiences that women have using a lot of these anonymous platforms like Craigslist or any of these things to find roommates or apartments are really hard. I think that there's not enough emphasis on understanding what women go through. My sister was trying to find a roommate, and maybe this is different culturally, but my sister was trying to find a roommate in Brooklyn, and half the messages were, I want to touch your feet at night, and all sorts of like weird, creepy things that people have said. And it's something where we build Nooklyn to make sure that type of harassment doesn't happen. And then the next aspect of that, finding people to live with in Brooklyn, is really also it's not just an affordability issue, it's a safety issue in which it's nice to know that there's someone who's waiting for you when you get home. If you don't come home that night, that someone's thinking about you. And so what we did is we started building tools to automate a lot of those issues. And the first one was an identity verification. So when someone gets into our network, what they have to do is take a picture of themselves, a picture of their ID, the back of their ID, we do a face match against the two items. It's kind of like a digital bouncer, and what it means is that there's just no anonymous weirdos coming onto our website, and everyone who's coming onto our website is backing their identity to that, and so it's just a much safer environment. And then we built tools to automate detecting harassment inside messages. That was really key because people will send all sorts of weird things through our chat, but we wanted to respect privacy on one side, so there can't be a human who's sitting there reading all of your messages, but we built a lot of tools to see how often someone's sending messages to, who they're sending messages to, and all that kind of stuff. And then, unfortunately, we also had to build tools that automate when someone posts an image on Nooklyn, what's inside that image. It's basically one of these unfortunate truths. When you build technology for the internet, it's just a countdown until someone starts uploading inappropriate images. And the last bit is that when it does happen, and the important thing to kind of mention here is that we've had over 1 million people use Nooklyn this year, and in the past 5 years, we've only had 3 instances in which someone felt uncomfortable. And I think that's something I take a lot of pride in building an environment that really fosters people to share about themselves, where they want to live. And it's something where companies like Twitter, who mention that they take privacy seriously, I think it's all bullshit, and that they have 1 billion users who've left their platform and will probably never come back. And just something as a way of experiencing this is you should click on to any woman who's on Twitter and just see the responses that she gets on those platforms, and it's honestly mind-boggling. And as a result, 76% of our roommate network are women, and they feel safe. They're sharing about where they're moving, when they're moving, what neighborhoods they want to move in, what they earn, and all sorts of information. And that's been probably one of the most proud moments I've had in the company, is building this type of environment. And then the next bit is digitizing Nooklyn. So another just best way I can describe this is that it should not require burning down a forest somewhere to rent an apartment in New York City. When I joined and got involved in real estate in New York, it's a really backwards process. And so what we did is we started going through every aspect of the process of finding an apartment and digitize the whole thing. And one key aspect is that we didn't design the marketplace and the search experience and then give it to consumers and solve what they think. What we did is we just sat there and listened to customers. So the type of search that people wanted to do was, I want to live 5 minutes away from my roommate, or sorry, 5 minutes away from my friend, 10 minutes away from this coffee shop, 20 minutes away from work. And so we built tools that really make it a lot easier to do those types of complex queries. And as a result, we've had over 6.5 million queries run through our software. The next part is the messaging aspect, where people have used this to book apartment tours, to find roommates. And the key aspect, one key thing I want to talk about here, is that we built this system called a hellbent, which is the idea that when someone is harassing someone on your system, the best thing that you can do is, rather than show them an access denied, where they feel like they're hitting this roadblock, what you do is you present them with that everything is going normal, and so they think that those messages are being delivered, but actually no one's seeing them, and it's just a way to keep them in this weird hamster wheel. But it really works, especially for spam as well, and making sure that someone doesn't come on there and try to sell weird stuff on your platform. The next part is the application process, where if you have, give or take, like 5 different roommates who are moving together, by the end of that process in New York City, you're printing maybe 50 to 60 pages worth of information about their, so everything from their work history, their rental history, bank statements, all sorts of stuff. And I just didn't understand why that was the case. And so we digitized that entire process. And another key thing in the application process is that, by having it on paper, if someone breaks into some office, everyone's social security number is just sitting there. And so it's something where I just genuinely didn't understand why people built systems like that. But the next part was paying. So we built a rental payment software that's now in process over $96 million. And one thing that we found was that payments is something where often the person who's paying for the apartment, especially for young people, is sometimes their parent, and their parent usually doesn't live in the same country or same city. So what was being asked of them, those professionals and the parents, was to leave work, drive to the office, drive to the bank, get a bank check, go from the bank over to the post office, and then from there overnight the check. And so there was a lot of wasted, just people driving around. The whole paper aspect of that was insane. And so we really made this a whole lot faster and safer, and all the data is encrypted. And the last part that we're doing now is the lease itself. And again, it's something where the average lease in New York City is around 100 pages. So if you have 3 roommates and you have a couple of guarantors, you're printing that over and over, and then you're printing a duplicate copy so that both sides have a countersigned version of this. And we're in the process of rolling out this feature where we will be able to do digital lease signings. The key thing here, and why it's taken a long time, is that the local government, city government, does not always recognize digital lease as a valid contract for housing. And so we've been working with the local government to make that work. And then that kind of brings us to the last step, which is that now that we've moved all those people and digitized this process and understand where people live and where they're moving to, well, we started this initiative, and it's called Coconuts. And the idea and the goal is to really make these neighborhoods better. And so we've done everything from partnerships with local nonprofits who are helping young immigrant women, to partnerships with zero waste grocery stores in New York City, to writing articles about how to compost in your city. And then we've taken that content and brought it to owners who build buildings, and from there have made it so that every single building that we work with has a composting bin. And we're much more, I guess, practical than most companies when we're talking about this. We're not just talking about the glues that go into the building. We're also down to the level of just having tote bags in the entry area, so that way if someone wants to go grocery shopping, you don't have to use a single-use plastic bag. And that's it. Thank you.
All right, we're at the end. We're at the end. We're at the end. It's been a long day. A couple quick little things and we'll get on our way. Hope you had a great day. I'd like to thank all the tremendous speakers and everyone that showed up, the volunteers, the co-organizers from Hessa Safra, PropTech Finland, and the Ron Production House. Also the wonderful people here at Magnum Live for doing their thing, and the Trade Factory. Special thank you goes out to the main partner, KPMG, and supporting partners, Sitewise, NewSec, CBRE, NCC, Renta, WWF, which is cool if you think about it. Platform Trust, Lafarge Gold Seed, Makira and FIRA modules, and all the other amazing PropTech startups. Personal thanks for me goes out to Michael from Renke for being awesome. Also thank you to Tasha for wrangling my personal self. Eels from NCC for being awesome, and from Renta. And also thank you to the audience. Hope you had a great day. Hope to see you all at the after party. I'll definitely be here next year. And I want to thank the people of Helsinki for hosting. I love this place in this weird, cool way. And hope you have a great time at Slush. Be safe.